that the government has acknowledged as well. Now, there has been a long pending demand on rate rationalization as far as GST is concerned. That's not a budget item, but it is going to be something that perhaps the government will now look at the budget exercise being over and done with. On this issue as far as what is the GST rate and what the real revenue neutral rate is and how the two shall meet, what is the way forward?
No, so that's an interesting question, but let me tell you that the revenue neutral, let me remind all of us here that when GST was being implemented, at that time the revenue neutral rate was thought to be about 15.4%. Yes. But actual practice experience tells us that in practice over the last 65 months, we have data for 65 months since it was implemented, and the actual effective rate has only been about 11.5%, so which means 3.9% lower. And despite that, you have seen that there is good buoyancy. We have done better insofar as GST is concerned. We have done better than the growth rates in GDP over there. In terms of rationalization of the rates, it's a continuing exercise, but I think most of the work has already been done on the GST side. There is a committee, there is a GOM which looks into it, and from time to time, you know, they make suggestions which come to the council, and the council takes a decision on them.
Okay, but you believe that most of the work has been done because there was a GOM that was set up, as you acknowledged. The recommendations of that GOM have not been taken forward, but can we expect that there is likely to be any significant change as far as the rate structure is concerned?
Most of the recommendations of the GOM, I think almost all, have been taken forward.
Okay.
So, but there is still, you know, some issues are pending with them, and that will always remain so. And so as and when, you know, the GOM makes those recommendations to the GST Council, the Council will consider them and take a decision on them. But apart from smaller changes, as of now, we don't have any major agenda. So no, insofar as GST rates are concerned.
So
nothing
no convergence
major.
as far as slabs are concerned?
Not for the moment.
We will continue with this current structure.
Not for the moment.
Not for the moment. Well, that's an important clarification coming in from you. You know, you said in your opening comments, Revenue Secretary, and I'll toss it across to the audience in just a second, but you said that a lot of the changes brought in the budget have been to also plug in the tax arbitrage and plug the tax loopholes. Now, the insurance sector is not particularly happy. The tourism sector, the travel operators aren't particularly happy. People availing of the LRS route in some cases aren't particularly happy, but let me just focus on two aspects, insurance as well as tourism, because the government said that you want to focus on tourism in mission mode. Both in terms of the allocation, it's the same as the BE of last year. There has been no change as far as budgetary allocation is concerned, and by doing away with some of the exemptions, etc., that were offered to tour operators, etc., aren't you then negating what you hope to do on the tourism side? And second, on the insurance aspect, both with the move from the old tax regime to the new tax regime, which is an exemption-less tax regime, as well as the tax arbitrage that you have now decided to plug, aren't you veering away from the aspiration of making India a more insured economy, a more insured market?
Okay, so let me take your second question first. First of all, let me clarify, and I think all of you are perhaps already aware, it's not about insurance. The tax is certainly not on insurance. It is the tax exemption being withdrawn on investments, primarily investments, because the way, you know, insurance industry works in our country and also, you know, in many other countries, India is not that way, you know, unique. Of course, we accept that, but insurance, of course, is totally exempt. Any proceeds out of on death to the dependent, you know, that's totally, so pure term insurance, all of you are aware, is totally exempt and continues to be so. It's only the investments beyond a particular point where it no longer actually remains insurance, but it becomes more of an investment rather than an insurance, that we have removed the exemption, and I think rightly so. because the exemption is for insurance. It's not actually, for investments. If you want to make investments in equity, you want to make investments in government securities, I don't think, we deserve, the tax exemption status for that. So pardon me, this relief that has been withdrawn, and that's again, for very, very high values, because we do understand that there is a savings component which is attached, which has been for times, since insurance has been introduced, perhaps attached with, insurance. So we have continued with that. But others is something, I think it was time that we removed it. It's still very high, 5 lakh and 2.5 lakh in ULIP. So 7.5 lakh will give, cover with savings of about 1.5 crore rupees for an able-bodied 35-year-old individual, as per, some of the most popular schemes. Tourism, you see, I really don't think, that it should really, the LRS, I think you're talking about the increase in rate about from 5% to 20% on LRS. So first of all, it's not on, the tickets, it's on the foreign travel tickets. It's on a tour package that is bought. But then, would there be any person who would be buying a tour package, whether it's foreign or domestic, especially foreign tour package, from his savings? None. None to my mind. All of them would be buying it from their disposable incomes, which are taxable incomes. So they are in any case, going to pay taxes. And so for those who are paying taxes, it really doesn't matter. And they are paying taxes, they are not, in the 7 lakh income limit or 10 lakh income limit where their tax rates are much lower. No, they are much beyond that. So they are paying, we feel at least 20%. And so that's why, we have increased it to 20%. And travel, I said, travel already, there is no tax on it. So it should really not, make any difference. I don't think anyone, buys a ticket from savings. It helps us on the other hand. So this is, the perspective, if you look at it from the perspective of the individual who buys, from the revenue perspective, there are, certain individuals we feel escape getting taxed. And so that's where, the plugging in of the loophole comes in.
Okay. I know that many people here have questions. Let me bring Shubhrakant Panda into the conversation. I think he is here, right here. Shubhrakant, you've got the microphone on the table, so yes, go ahead. The president of FICCI, go ahead, Shubhrakant.
Mr. Malhotra, I'd first like to congratulate you and your team and, of course, the Honorable Finance Minister for a budget which I think is bold, progressive, and what had been, FICCI's and I suppose every industry chamber's refrain about being growth-oriented, I think it certainly delivers on that. Just one quick question among some of the recommendations we had made. One was relating to RODTEP for some of the sectors which were left out initially, and that was in a very different scenario when those sectors were doing extremely well, primarily commodity sectors. That is not the case now. But in any case, whether a sector is doing well or not, RODTEP is more about remission of taxes and duties, and that enhances manufacturing competitiveness. So just wanted to understand the thought process for these sectors to be like pharma, steel, etc., to continue to be out. And is there any timeline in mind for that? Thank you.
Yeah, so RODTEP really, it doesn't, I mean, which sectors to include and all, that doesn't actually, come in as a budget exercise. In the budget exercise, we really, give a budget, the numbers, the expenditure side. So it's basically about that. So whatever requests are there relating to sectors that need to be further included or their rates need to be changed, etc., that's looked at by another committee, the RODTEP committee, that looks into those things, and those can, always be considered by them. It's not really a budget thing. So, and so that's why, you don't find anything relating to ROTTEP sectors.
Oh, you know, and I agree with you. It's not a budget thing, and of course it will also depend on the kind of negotiations that the Commerce Ministry will put forward. But what is a budget thing, and I want to address that with you, and that was also one of industry's recommendations, was that the 15% concessional tax rate should continue beyond the sunset of 2024. That's not been the case. Why is that?
Why we didn't change the sunset now, you know, I mean,
no, in the context of the aspiration of India becoming the manufacturing magnet, trying to become the alternative, you know, destination for supply chains at this point in time, the assumption or the expectation was that another 5 years would have provided a path to predictability, and hence people would have found it easier to put in investments here. So from that perspective, that was the recommendation, but what was the government's thinking on that?
Yeah, so aspirations, see, we try to meet all aspirations. I mean, that's our effort. But if the aspiration has now become that every year we'll extend a scheme by another year so that, you know, next year again we come up with that aspiration, and again, you know, we take that step. I think it's a good thing that the government has dispelled that, and government has said that, well, if we have a sunset date, then we mean, you know, it is the sunset date. And so in line with that, we had increased it, you know, last year, you know, but that was because of COVID. So I think it's good that in case, you know, unless there are some extenuating, you know, circumstances because of which we have to do it, I think it's good if everyone knows well in advance as to what those dates are. And on the other, I mean, this is on the lighter side, but otherwise, you know, we have had good traction. There are about 3,500 companies which have already, you know, started availing of the benefits under this scheme. And this is not something, you know, which we could have 15% tax rate. I'm sure all of you would agree is not a rate that we can have or afford to have, you know, perpetually.
No, I appreciate you putting that on the table. But since you said that, you know, if there is a sunset clause, then the sun must set as per that date. So if I were to extrapolate what that means as far as the FAME subsidy scheme is concerned for electric mobility, because the sun is expected to set there in 24 as well, would it be fair to assume that it will?
Well, I'm sorry, you know, I'm not, because I don't deal with the subject. I don't deal with the subject. But what I meant is that if we announce something with a certain sunset date or certain, you know, conditions, then it's good for all of us, everyone, you know, because you work, you know, with those conditions. It's not good, you know, to change those days, to change those conditions, to change those rules, unless there are reasons. But FAME, I do not deal with it. So I will not be able to, you know, answer something which I don't deal with directly.
Fair enough. Prateek Jain, I know you have a long list of questions as well. You've got a microphone right there. Yes, if you can stand up, it's easier for them to get a microphone across to you. Go ahead.
So my question was more on the PLI which is there for manufacturing, PLI. For service sector, industry has been demanding that there should be some kind of a scheme which should come for services as well, at least for niche services like, let's say, a medical R&D kind of a thing. We had SEIS scheme earlier, which has now been withdrawn after 1920. It has not been sort of extended further. So I just want to know your thoughts that does the government believe that as far as service sector is concerned, it is self-sustainable now, no further support is required, or something is there in the annual?
Again, you know, I'm not the right person, you know, to be taking this question. Sorry about that. But yeah, see, I mean, the schemes have been mostly in manufacturing because that's where, you know, we felt that there are going to be more jobs, and services is an area. Of course, there can be, you know, niche, smaller areas where there is perhaps need for a push. And it's an ongoing thing. So the concerned ministries can certainly, you know, be asked to look into it.
You know, if anyone else has a question, yes, we'll get a microphone across to you. But in the interim, till the mic reaches you, let me ask you a question on the non-tax revenue side. We've got the DPAM secretary coming in a short while from now, so I'll reserve the questions on disinvestment for him. But there are a couple of concerns, specifically in relation to the estimate that's been made on the telecom side, on the DOT realization side, which seems like a highish number number at over 80,000 crores. How confident do you feel of being able to realize that?
Again, that is, for the Deepam Secretary. He's there,
Okay.
so he'll answer those questions. I can see he's already come here. So it's better, that he answers it.
Sure. I'll get to him. Yes, sir, go ahead.
This is Sunil Goel. I run Your Nest Venture Capital Fund. And I want to tinkle the imagination that we have high potential entrepreneurs now who can build global companies while being headquartered in India. And that's the push that we keep on giving to these entrepreneurs. Stay in India, but build for the world. And today there are entrepreneurs who can build companies like Apple and Google from India, and that's the reason I'm asking this particular request, sir. India has grown from 10th largest to 5th largest and with the visibility to become 3rd largest. We are growing the fastest. In this particular situation, can we take bolder steps? The winners will be only when you take differentiated steps. We are doing 20% LRS, which is a good stuff, 20% TDS on the LRS. Is it possible for startups that we do not have this, full convertibility or convertibly limited limitation? We cannot remit capital outside of India to attract talent, to do research, to hire talent outside of India, to have marketing spends outside of India. RBI limits 4x of our net worth today. Whereas if a company receives $100 million from Forex, I should be allowed to take $100 million out there, whatever will be in my net worth. That's the one simple request. And second, how do we keep our companies in India if there is going to be an angel tax on foreign capital coming in? We will be, left with Vivad with income tax officers continuously on this thing.
No. Yeah. We don't want Vivad, but this is a genuine concern that many have put on the table, Mr. Malhotra, not just this year, but it continues to be something that has been raised over the last several years.
So let me clarify this. This angel tax that you're talking about, it's not on startups. The startup category is excluded. There is no angel. The tax that we have now introduced or extended rather to the non-residents is not for startups. Startups which are recognized by DPIIT, and there are a fair number of them. And I'm not talking to the ones, I'm not talking about those which have been certified by the Inter-Ministerial Council, by the committee, which is very few in number. Those startups are excluded from this angel tax. So through your medium, I want to dispel this notion. For others, well, it's on principles of parity because we have a tax, an angel tax as you call it, for residents. So similarly, we have extended it to others as well.
One of the recommendations that was made in the economic survey as well, since we are talking about startups, and I'll get to you in just a second, and on the issue of domicile, not just prevent startups from moving outside, but also encourage and incentivize startups who have moved outside to move back to India. Reverse flipping is what the economic survey had positioned that as. Again, something that you believe that you could perhaps look at, consider, especially in the context of the fact that the recommendations of the Damodaran Committee, which look at private equity, venture capital, etc., have not so far been taken into consideration in the budget.
No, certainly. I mean, if there are, we've already done, something for the gift city, for funds, which are outside, if they relocate to the gift city, then we have made it tax neutral for them. There is no taxation for them. Similarly, if there are industries or there are other people, who are wanting to set up shop, relocate from outside to India, the package of incentives that they may need, that is certainly, work in progress that can certainly be looked into.
Okay. Yes, sir, you had a question. Speaking at the microphone. If you can stand up, it's easier for them to spot you. Yeah.
Sunil Jain. Congratulations for the budget. I think it was really good for the industry, but you did mention yourself that the Honorable Minister said that they've reduced the tax slabs, reduced the taxation rates. But on the other hand, when you're reducing the tax rates on the rich, let's take it that way, you are taking that money out from some other taxes, which you just now mentioned that we want to tax investments, we want to tax LRS. So everywhere you're going to add those tax, probably you're trying to give a relief here and taking it the other way. Is it correct?
Very nice to see you, first of all. A long time we have met, so hello, good evening to you. We go a long way. So, yeah, but no, certainly not. The reduction in tax rate is for everyone. There's not a single person or income level where we have increased tax rates. That is certainly not, what the aim is, and that's certainly not been done, and neither is it the intent in future. But yes, where people are evading taxes, we try to expand the tax base. Where people are not paying the taxes that are due, the case in example, we talked about insurance. We didn't talk about, MLD, the market-linked debentures. Yeah. So, we didn't talk about, REITs and InvITs, where some income, is not getting taxed either in the hands of the trust or in the hands of the individual. When we do these, we deepen, our taxes and we widen the tax base. So that's how, we plan to increase our revenues, and certainly not by, so yes, by taking from those who should actually have been paying those taxes. And not from those, who did not have to pay taxes in the very first instance.
Okay, so yes, lots of questions there at the back. Padmaja, if you can stand up so that they can get a microphone across to you. If we can get the mics moving faster, it'll be easier for us to get more questions addressed. I'll come to the lady first, sir, and then I'll come to you. Padmaja, go ahead. And if you can get the mic to the gentleman as well. Yes, Padmaja, go ahead.
Thank you, Shireen. And sir, congratulations on a great forward-looking budget. I think there is a lot to build the country forward, the economy forward. In the interest of being short and crisp, I represent Indian Angel Network, and we are an early-stage investing platform. So that I'm really connected with entrepreneurs and startups and VCs and angels right through. So simple question, sir. Startups, Amrit Kal, the vision has been already given that technology and knowledge, those are the two big pillars of the budget, and I appreciate that. So startups are going to bring that technology and knowledge to a great extent. And from our perspective as investors, what we look at is there are two elements. One is funding, and the other is talent. Those are the two elements that create, hopefully, very valuable businesses. So funding is coming in different ways. I won't go down that path right now. And angel tax, you've already clarified. Thank you for that clarification that it doesn't apply to DPIIT registered startups. But on talent, sir, we are really facing a big issue. And I want to share this. When startups start out, they don't have enough revenues or cash flows to really pay market salaries to high quality management or technical or any kind of teams. So the only currency they have is ESOPs, right? And currently what it is that the ESOPs are taxed when exercised or after 5 years. There is a leeway that the tax laws have given. The only thing I want to submit to you, and this is very, very imperative because it is one reason why startups are flipping overseas because of talent. So can at least for the startups, there be a kind of a relook to see that ESOPs are taxed in the hands of the ESOP holder when they monetize.
Right.
Because what happens is the share value does go up when they exercise it, and even 5 years later, they pay tax out of their pockets, and then the other way it goes down.
I think he's well aware of the problem. The question now is when are they going to act on it, if at all?
No, so we have already given you a special dispensation, right? Yes. So you are happy that we have a special dispensation for you, but perhaps the issue is that the number of ESOPs that have got this dispensation are very few. Because we have already given you a dispensation that, 5 years deferral is there, or when you exit the company, it's at that instance, so which is not there, for other companies. It's only for startups that we have given this dispensation. The problem, however, is that getting, the certification from the IMC. So that's an issue that the government is aware of, and we'll work with DPIIT. This is actually, to be done by DPIIT. I'll They are aware of this issue, and I'll again, on your behalf, take it up with them.
The
and try to
DPIIT
resolve
secretary
this
is going to be
issue. And he's
joining
going
us
to come,
shortly,
you can ask him.
so we'll get the DPIIT secretary to clarify as well.
Hasten or quicken, this process.
Well, yes, Padmaja, we're all hoping that it will get done. But, before I let you go, Revenue Secretary, and I know that all of you are on an assembly line of engagements this evening post the budget, what do you believe could be the potential risks at this point in time? Most of them are global in nature, but any domestic risks that you're going to be mindful of? What will be your priority areas that you intend to focus on?
As you have mentioned, it is primarily, the foreign risks arising out of, the political uncertainties, the global supply chains, and of course, the foreign currencies and how, the export markets actually behave, how the interest rates actually pan out abroad, and what the flows of monies, that triggers, and how the economies outside do, because our economy is quite insulated, but still, it's not unaffected.
Yeah.
So those are, it's based, primarily, it's going to be the global challenges.
Well, the global challenges. Sanjay Malhotra, the Revenue Secretary, thank you very much for joining us here on the Budget Verdict. It's been a pleasure. Thank you for addressing many of the questions and the clarifications that we've had from you here this evening. Appreciate your time. Ladies and gentlemen, a big round of applause here for the Revenue Secretary. We'll take a break and we'll be joined by the DPAM Secretary Tuhin Kantapande in just a moment from now. We're coming back in a moment. Thank you very much, Mr. Malhotra, for joining us today. Welcome back. You're watching the CNBC-TV18 Budget Verdict. We are live across our platforms. Thank you very much to the CEOs who are joining us here this evening for the first post-budget interaction with the budget architects, the budget makers. Joining me now on stage is the DPAM Secretary, Tuhin Kantapande. Mr. Pandey, many thanks for joining us here on CNBC-TV18. Before I get to you about next year's target and next year's aspiration, let's talk about this financial year. How do you intend to close the gap?
This financial year, we have a target of about 1.0 lakh crore, 1.05 lakh crore if you count disinvestment as well as the dividend from CPSEs. And we have done about 68,000 crore yet, about 60, I mean, close to 70%, about 70%. And, usually on the dividend side, we have been exceeding. In the last year, we had a dividend target of 46,000 crore and we ended up with 59,000 crore because we had certain headwinds this year. But nevertheless, I think we would do it better than our target there. And on disinvestment, we will continue our, we will continue to strive to meet the target within the market conditions that we get in next 2 months.
You're smiling while you're saying that you'll continue to strive to meet the target, but what could you depend on? Could you depend on the likes of Hindustan Zinc, for instance, to be able to close the gap on the disinvestment side? Dividend, I understand, and you pointed that out quite eloquently, that you've been able to exceed, but on disinvestment, that's where the problem is. So could a Hindustan Zinc-like option come to the rescue to close the gap?
Well, I don't think that we really specifically, at least in those cases where we do minority stake sale, we really don't reveal the names and the numbers, and you know that certain SEBI norms are there, certain things are there where we don't, this thing is there. But certainly we had two pillars. One is the minority stake sale, and the other one is the privatization, where we do what we call also strategic disinvestment. And put together, we have to look at different conditions and different stocks, and look at, particularly looking into the interest of the minority shareholders, and then act accordingly.
Now let's talk about the larger issue of disinvestment, because Mr. Pandey, this has been a cause of concern, and I would say that this has been one of the areas of disappointment expressed not just last night or last evening after the budget was unveiled, but over the last few years. And I'll tell you why. Because year after year the target has been missed, and missed quite significantly. 210, 175, 73, 65, 51. And we've seen a significant decline in the targets. Now one could argue that you're now finally putting a more realistic target in place, but what seems to be the issue as far as disinvestment is concerned? And for the benefit of this audience also, let's understand, because so much was made about disinvestment, strategic disinvestment, privatization. What should we now expect as the run rate to really realistically be?
I think let me also tell that, these last 3 years is precisely the years when we had major issues just after the budget announcements. We have, for the first year, we had COVID, and the second year we had, the Delta wave, and then third, we had Omicron and Ukraine crisis, and the Fed and the others, where, the sentiment of markets completely changed. We had also some of those big ticket disinvestments, for example, BPCL, where we proceeded well. But in between, they were caught up in the energy transition issues, also the transition of geopolitical issues on fuel. And then obviously the bidders didn't want to proceed further, and they had to call off that EOI. So I think one of the big lessons that we have learned, of course, we have built up capacity in our department and the other stakeholders that we work with. But we do have, if you really see, 4 things that actually impinge on disinvestment targets as well as strategy. Necessarily, disinvestment strategy has to be calibrated on account of the following reason. One, the bandwidth. When we have, we had about 4.07 lakh crores of disinvestment over from 2014-15 over the last few years. And obviously, if you have disinvested certain equity, you have less to disinvest going forward. So that is one which is a reducing bandwidth. The second one is, of course, is the issue of markets. As I said, last 3 years, especially after that budget announcement, we had a major issues relating to markets. Remember, we had to do an LIC IPO last year against the major headwinds, and we were planning a 5% IPO, where the market situation became such that we had to go for a 3.5% IPO with a special dispensation from SEBI. So these are the things that we have faced. It's quite an climate of uncertainty and challenges so far as the disinvestment is concerned. The third factor is we have keeping in mind the minority interest, which is, when we were doing ETFs over the last few years, we had a consistent, complaints from investors that there is always a price overhang, then when they have repeatedly the issues are coming, the OFSs or the ETFs are coming at a discounted price, and which is leading to erosion of the wealth at their hands. And that was reflected also in, if you really see the, the market cap and the rate of return on the CPSCs, on the BSE and Nifty, they were consistently falling as compared to the main BSE, Sensex or Nifty. This trend has been reversed. If you look at either you take it last 3 years put together or 2 years put together, or you take even this current year, in all these 3 situations, we had our CPSC index, BSE, both on the BSE and Nifty, has exceeded the main BSE and the Sensex. So to some extent, we have been able to close the gap. So I think this is a very important consideration of how we do it. It has to be necessarily a calibrated strategy. The quantum of share sale and the price at which we come has to be conditioned. Neither we should have a frequent share sales on that, nor we should have very much discounted stake sales. And I think we have to calibrate our expectations accordingly. The fourth important consideration is the process involved in the privatization. In the privatization, we have always, if you look at from the budget numbers, because you're starting your whole premise is from the budget side, the budget numbers. And my plea would be that I think more than important is also the reforms. When a particular enterprise is able to, unlock its potential going forward, I think that is a much more gain for the economy and to the enterprise. Because we are also for the stakeholders of the employees. We are for the enterprise, which includes employees, which includes general economy, its suppliers. So when Air India is disinvested, and obviously it has unleashed, a lot of other forces, economic forces and multipliers, which we would not have otherwise been able to do. You can say that the receipts to the government in that case was not very much, so far as the targeted number was concerned. But we were able to have as an opportunity cost a lot of savings, because the 20 crore a day, we are not able to, there's no taxpayer burden on that money anymore. So the same case is that of Neelachal Ispat. If you have a plant which is lying closed for so many years with workers not paid, and finally not only we are able to pay them, but also there is a great deal of capex going on of almost $8 to $10 billion in the decade in that place. I think that is unleashing the whole sort of new economic forces in that. And there is a tremendous, benefit to the employees and other stakeholders, despite the fact that in the NINL, which was done this year, we did not receive any receipts.
No, and I think the logic, the economic logic for doing the disinvestment, the kinds that you just spoke of, whether it's Air India or Neelachal Ispat, is well taken. But what next? And does the government still have the appetite to go through with privatization of things like banks? Because we haven't seen the legislative changes being moved in Parliament through the course of the year. The expectation was this was a budget promise made in the last budget. So is there still appetite to go through with things like banks, etc. at this point in time? And I'm not talking about IDBI Bank, because that's a special case.
No, IDBI Bank is a different case, of course, but on that point I think it has been made clear that there is no such plan as yet, because I think that needs the legislation. It's not being moved.
So the bank privatization at this point in time is on hold and is not being taken forward. How confident do you feel about closing out IDBI Bank in the next few months? Because there we understand that there has been a fairly positive response that's come in from a bunch of investors.
Yes, I think we have received the initial EOIs and we expect to move it forward, and my hope and expectation is that we should be able to close it in the next financial year.
Okay. Any questions here for the Disinvestment Secretary? If you can raise your hands, I will get the microphone across to you. There's a gentleman right at the very end. We'll get to him. But if you can share with us what the pipeline or the calendar looks like at this point in time in terms of candidates that are more suitable to be taken forward for disinvestment, strategic disinvestment, particularly in the conditions that we are currently in? I would imagine that BPCL is off the table.
We have actually put it out in our website that, it's not off the table, but it's like waiting for a right environment to settle in. So, because the point is that, there were certain reasons due to which the BPCL could not proceed forward. So not any lack of effort on our part. In fact, we had, because, the entry barrier, the net worth requirement was $10 billion. $10 billion in the case of BPCL. So we had sufficient bidders to start with. But I think this was such a large transaction that it was also caught up in several international issues relating to energy transition as well as Ukraine crisis.
Yes, sir, go ahead.
I am Dr. Harsev from the dairy industry. So, on one side, the government is trying to go in the route of the disinvestment for bringing in the private sector and the corporate sector for development of the country. But we have seen in the dairy industry for the last couple of decades, there have been the policies have been more lopsided towards the cooperatives, whereas the nearly half or slightly better than more than a half of the milk from the organized sector is being processed by the private sector, and half is being processed by the cooperative sector. Only last budget there have been an inclusive budget for this, wherein they have considered the shops for the private sector. Now, if this budget again, most of the shops have been given to the cooperative sector and not even a single to the private sector. If this is the disparity which is going on, we are not giving the level playing field to the cooperative sector, private sector, which is doing half of the milk processing. So I think that development could be a problem.
That's a very specific question pertaining to the dairy sector, and you're right, there was a lot of focus on cooperatives and especially self-help groups and women-led cooperatives. I don't know if the DPAM secretary is well placed to answer that, but if you would like, sir, take a stab at it.
No, I wouldn't like to comment on this.
Okay, I expected that. But let me understand from you, in terms of the pipeline that you're working on at this point in time, given the market conditions, given the market dynamics, how confident do you feel of being able to move on the path of strategic disinvestment? Which are the areas that you believe, or which are the candidates that you believe that you will be more confident of?
I mean, we have got ongoing transactions, and I think we are keeping, fair amount of information as and when we have progress on that side. As I said that, in our processes, we have certain candidates which are already going on at certain advanced stages where we also have demerger processes. And I think it's important to also highlight that in some cases the demergers are necessary because you have a lot of real estate which is bundled out with an operating company. And it is neither in the interest of the company's shareholders nor in the interest of the interested bidders, because they may not be interested to actually bundle up that real estate. For example, in one case we had say 125 acres of land in Bengaluru, for example, freehold, which was tagged. Then I think the land value itself will be far, far in excess of what possibly the market cap of that company, and that has to be actually for the interest of the BEML shareholders, has to be disinvested in a different way, not really as a part of the operating company, but the real value as a real estate. The same thing is true with when we are saying that Air India house in Nariman Point, or we say that the shipping house in the Nariman Point are not really part of those transactions. It goes by that. It also means that a huge tract of land in Vasant Vihar should not be a part of that particular transaction of Air India. So, but the only process is that when we try and do it, it is not easy to just sell off those things so easily. So we have to really demerge in a listed company initially to do that. And certain processes have to be gone through, which is in the NCLT process in the normal case, but in this case in the government companies, there is a similar process which is equally, under the law, companies law, which is to be run by the MCA, which also has the similar expectations of, the creditors, the independent minority shareholders, separate approvals, and so on. So it's time intensive. But nevertheless, that is the right way to structure and go, because the value will be discovered fairly and squarely, properly in that process. Now, given those things, that once the demerger process are through, similarly, for example, in case of NMDC Steel, we have done a demerger process out of the NMDC for a unit which was being put, and that NMDC Steel has been demerged, and now, of course, it will be listed. But we have received the initial EOIs for those NMDC Steel as well. So similarly, we have got some consulting company, we have a lifestyle company, we have a steel company here. So these are the ongoing transactions which would like them to be taken to the logical culmination. So I think it's very important for us to consolidate rather than just keep on adding to the pipeline. We would rather like to complete these cases and get those things which we have been able to do, to add to all those things that we have been able to do in Air India or NINL and so on.
Okay, so the focus is on getting the ones that are already underway over and done with before you actually add more to the list. But let me also ask you in terms of asset monetization, because once again, this is something that the government was banking on in a big way. If you could explain the roadmap as far as asset monetization is concerned, given the experience the government has seen, especially in the past year or so.
I think in asset monetization is basically, I think, is a part of that capex cycle that we want, where a lot of money which is required to be brought in upfront can be upfronted through, putting some of the core assets into, marketable things like units, either through InvITs or through TOTs and so on. And in some of the cases, the asset in, for example, in case of mining and coal and all that, it involves into really kind of a private sector investment instead of public sector investment that can come in order to, put that money into the mining and so on. So those are actually, barring a small amount of money, actually are not really receipts as much into the Consolidated Fund of India, but they are actually money which is available for the enterprises to put in, more capex.
Right.
And that cycle is on, and I think it's in different stages. Like you had in the power side, on the road side, you had both InvITs and you had also, in fact, InvIT framework was organized, and both private sector InvIT and public sector InvIT have taken place. In case of road sector, it's happened in case of power grid, for example. In the power side, we are also talking in terms of silos. We are also doing it in case of it has happened in case of airports. Some of that will be, of course, in mining and so on. So I think that is something which different ministries are working on.
Well, speaking of different ministries, it's time for me to welcome to our cast of stars here on stage, the Chief Economic Advisor, Anantha Nageshwaran. Mr. Nageshwaran, if you could join us here on stage, please. Ladies and gentlemen, a big round of applause for the Chief Economic Advisor, Anantha Nageshwaran. Mr. Nageshwaran, many thanks for joining us. Before I talk to you about the domestic factors, let's talk about the changes that have happened overnight globally. And let me begin by asking you about what you make of the commentary that's come in from the Fed Chief Jerome Powell, stating that perhaps the first signs of a disinflationary environment. How comfortable does that make you feel, especially in light of the global uncertainties that we are faced with?
So he, of course, did mention the fact that temporarily, or at least for now, inflation pressures have eased. But he also mentioned that they are very determined to reach their 2% target, and they are committed to further rate increases. But the financial markets took a different view of his press conference. So that is what bothers me, because financial markets, having been conditioned over 2 to 3 decades in a different manner, or are refusing to believe that this Fed would want to see the inflation rate come down even further and would be poised to tighten. So the more they kind of engage in this eyeball-to-eyeball confrontation with the Fed and expects the Fed to blink first, and if the Fed doesn't, then the amount of rate hikes that will be required will become even more than what would be the case otherwise. That is what bothers me from the emerging market and the Indian angle.
And which is why you talked about entrenched inflation and the possibility of a longer tightening cycle as well in the economic survey. But that's one of the global factors. The other global factor that I want you to comment on, and I don't think that we've discussed that enough, especially since we've been poring over the budget, is the impact of what's happening in China. The reopening, bouncing back as far as manufacturing is concerned, the PMI in China coming back to about 50, under that is of course contraction. The implications of China reopening in the way that it has on the global economy and what it eventually will mean for India as well.
So obviously, given the size of Chinese economy, whatever happens there will have a global impact, whether it's a slowdown or an expansion. And to the extent that if the recovery happens to be smoother, then definitely it would have it would impart an upward pressure on commodity prices. Including it will create a higher demand for crude oil. So therefore, we have to factor that into our calculations going forward in 23-24. So the speed with which Chinese economy returns to normal and the magnitude of the bounce from last year's growth rates will definitely have a material impact from the point of view of global inflation and from the point of view of commodity prices. So in fact, it could even prolong the monetary tightening cycle in the Western advanced economies. So that is something we need to watch.
Yes, we need to watch that. And so a slowing global growth is in fact advantage to India.
Slowing global growth would be what the doctor would order for India.
Would be what the doctor orders for India. If there are any questions here for the Chief Economic Advisor, do raise your hands and we'll try and get a microphone across to you. But please keep the questions relevant to the CEA. Yes, sir, go ahead.
Hi, my name is Anil Advani. There's one particular question that has been bothering me and I've never got a right answer for that. These FIIs that buy stocks in our country in the secondary market results in a lot of forex coming to our country. But none of the FIIs come with the intention of making less than 20-25% return on their investment. When this money comes in, the dollars come in, RBI absorbs these dollars, rupee gets into the market, inflation resulting in inflation, RBI absorbs this rupee by issuing bonds, borrows at about 6 or 7%, and then onward puts these foreign currency in US bonds, which earlier were yielding about 1 to 2%. So this whole benefit of getting FIIs to invest in our secondary market, I somehow have never understood. Has there been any data that how much money has come in by these FIIs in our markets, and what is the current value of that investment? So if let's say $1 billion came in and it is worth about $5 billion, whether the whole exercise was worth it?
So if you look at the data available from RBI and the national NSDL or CSDL, you do get data on the FII flows at cost. But if you want to know what is the value, current market value of these FII flows, then there is a separate table in the SEBI website, Assets Under Custody, that would provide you the market value of the current FII holdings.
Well, you know, that I think is very helpful advice that's come in from the CAA on where to actually source information, where to look for information. But CAA, you know, on the issue of markets, and I want to address this with both you as well as the DPAM Secretary, and it's been a fairly volatile last 24 to 48 hours as far as the markets are concerned. I want to link this back to, you know, your point that you made about the indigestion having been worked out of the system. Bank balance sheets are looking strong at this point in time, corporate balance sheets are looking strong, and which is why you believe that we are on the cusp of unleashing the animal spirits in the economy. But would you be concerned, and I don't want to draw you into any specifics, but would you be concerned about the kind of exposure that large conglomerates have to the banking sector at this point in time?
Based on the information we have, it doesn't look like at this point it has got the potential to derail the beginning of a new financial cycle.
Okay, so you don't believe that is the case at this point in time? Okay. outside of the global risks that we spoke of, which of course have to do with interest rates and inflation, and there are many imponderables there on how things will actually pan out given the geopolitical scenario at this point in time. What are the other factors that you're going to be watching for, both in terms of what could move the global markets and then thereby impact India?
So, I mean, as I mentioned in the survey as well, almost 100% of the risks to our scenario for India's growth and inflation in the next financial year, almost all of it come from external factors. One is geopolitics, of course, how the ongoing conflict in Ukraine would pan out, both in terms of its duration and in terms of the intensity, and what kind of impact it could have on both crude oil price and also on supply chain disruptions. And second is the entire monetary policy tightening cycle and the strength or the weakness of the dollar. All these things would be key determinants of how our not only our growth and inflation play out, but also on how our external balances evolve in the course of 23-24. So as far as I can see, pretty much at this point, I do see predominantly external factors being able to shape or mar the kind of assumptions we have with respect to our real economy in the next financial year.
Let me talk to you both at this point in time about the aspiration of being able to draw in the manufacturing investment, both global as well as domestic, especially in light of the alternative destination in light of the geopolitical situation that is playing out. Do you believe that we are today more competitive than we were, and this advantage that countries like Vietnam, etc., have been able to enjoy, especially in the last few years? Do you believe that in light of the changes that have happened, whether it's Gati Shakti and the work in progress as far as the logistics policy, etc., is concerned, that we are today more competitive and thereby will be able to capitalize on this opportunity better?
That's a good question, Shireen, but whether we are competitive at this stage in monetary, in cost terms, I think we need to have better data to be able to say so. But we are competitive in other dimensions in terms of producing, in terms of ensuring a certain supply chain resilience, certain supply chain security for direct investors. Of course, our labor costs are much lower, but obviously those who want to invest look for labor costs adjusted for productivity, adjusted for skills endowment, etc. So that is why I said we need to have hard data to be able to speak about competitiveness. But certainly with our the kind of infrastructure provision that we have today compared to, let's say, 5-10 years ago, etc., and also due to the fact that in several sectors we are offering certain incentives if they meet preset production benchmarks, there is enough nascent evidence that global manufacturers are beginning to factor India into their calculations.
Yes,
I would like to add also, more from the nature of, investor interactions that we already have. And a lot of interactions, during the course of the year we have had on various matters with investors. So, I mean, I'm just speaking to you from their feedback. One of the important thing in India, I mean, let us look at some of those advantages that India has today. One is that, of course, at the cost of repetition, I would say, the talent is a very important factor. I think the Indian talent is recognized, especially the younger generation, and absolutely, people are going gaga. Just now, before I came, I was meeting some important foreign investors, and they said they're keen to double their investments. And one of the key considerations they have...
Share the names with us?
No, I'm sorry, that will not be fair. But I would say that, they said that, one of the very key important factors is the talent they have across the different skill set, across the skill set. And the young Indians, they are of a very different breed in terms of delivery, in terms of competence and so on. So demography is another, where you have the markets which are also the middle class growing and all that. Third, logistic cost has consistently come down. over a period of time for a very large capital spending that has been the focus of the government. And I would here draw your attention to not only the capex which is done over the last 2 years during COVID, which was another important strategy, capex-led growth, but also this year, when we're talking of capex, it's not merely 10 lakh crore that's there out of that's the government consolidated fund of India money. Then there is another 3.71 lakh crore. If you read the budget documents, this is what is called grant in aid for creation of assets. And just to give you an example of what are these kind of assets are. When you give a grant in accounting terms, it is not booked as capital expenditure in the government of India's budget. When you give the grant in aid to the states, it goes as a grant, which is a revenue element. So it's purely accounting thing. But if you look at the use to which it is put, it is capital. For example, if it is rural roads, it's capital. But from Government of India, when the money goes in, it goes as a grant. So it's a revenue. So the budget has already given a figure of 3.71 lakh crores on top of 10 lakh crores, which is basically for capital assets. So that makes it 13.71 lakh crore. Now, the government, if you look at public sector, which is actually controlled by the government at more than 51 when we are controlling some of the public sector, their investments are very large too. In the next financial year, it's budgeted to 4.88 lakh crore, up from 4 lakh crore that we are expecting the investments have taken place by the CPSEs. So that makes it 18.5 lakh crore. And that is 6.2% of GDP. So I think because I was hearing the conversations and I thought that people are just talking of this 10 lakh crore only. That's the direct government capex. But this is another 3.7 and another 6.2. And if you see 18.5 lakh crore, which is 6.2% of GDP, is being propelled in various kind of projects and others. And when they're going into infrastructure, they're going into a different capacity building. And that particular thing is adding to the competitiveness of the economy. Not to say the roads which are being improved to the ports, the railway connectivity which is getting it done, and then another factor is on improving competitiveness is the GST and the way it operates. Practically, the Indian market is fairly unified. GST has stabilized. You can actually move your goods very rapidly across the country. You don't have, things up there. In tax terms and financial terms, you can do that. So I think that is another important factor. So all of these put together, and plus, of course, the geopolitical, that necessity of, India also being a very important part in the supply chain, I think India is in the radar of everyone. And all what we have to do is put our heads together and see it happen.
Well, at least we're getting the two of you I'll come to, yes, sir, we'll get a microphone across to you. If you can stand up, it's easier for them to spot you. Go ahead.
So I had one question. I run a large fintech platform headquartered out of New York. And one thing which is happening right now in US is the Inflation Reduction Act is actually a misnomer. It's for clean energy. US is going to massive amount of tax incentives coming in, so much so that even the EU is extremely worried. And what's starting to happen, we are seeing that, that we fund a lot of businesses out there, and we are starting to see a lot of European companies even starting to shift their manufacturing over to US right now. And I don't see any, even debate in India around it, that how India is going to compete, in that. And coming to the DPM Secretary, what Shireen had asked about the banking privatization, so what the government is doing with fintech platforms like us is that we are launching a lot of the tax credit financing programs right now for businesses who are setting up the units, because it takes time for them to get the tax credits back from the government, and the government wants it to happen and so that there's no fraud. The problem we have been interacting with Ministry of Finance also has been that because of lack of any legislative reform on the side of banking privatization, none of that can happen in India right now. So that clearly means that we won't be competitive both in manufacturing of clean energy, and we won't have the capital that is required, because the debt capital cost in India is so high today that if we have to compete in the world markets, then we need to have that debt capital
also be available.
Sure.
And in US we get it from everywhere. Europeans are coming, you know, you name it, everybody is coming to finance that, right? Because that's a pretty safe kind of investment on the debt side, you know.
Theo, would you like to take that up?
No, I think I'm not really particularly, you know, convinced about, you know, because we have both private banks operating and the public sector banks operating in Indian space. So how is it that the privatization is linked to a particular business of fintech not being done?
Yeah, maybe.
Yes, but the cost of the capital, but the cost of the capital is an issue which is not linked to privatization or otherwise.
Yeah.
It is linked to other factors in the economy because we have private banks too, right now operating in India.
Yes, maybe we can take that conversation offline. I want to address two issues with you specifically, since GST was brought up here by the DPAM Secretary, and I want to understand what you believe the roadmap could potentially look like. You know, no one's now talking about rate convergence at all at this point in time, even though that was what the aspiration was, that we had too many rates and we should simplify the GST regime. More importantly, as far as the revenue neutral rate is concerned, your predecessor had put forward a revenue neutral rate. We're nowhere close to that at this point in time. What do you believe is the roadmap as far as GST is concerned? Should we just leave it where it is because, you know, the government is happy with collections that are coming in at over 1.5 lakh crore rupees for now, so don't spoil the party?
No, the government is aware that there has to be a GST 2.0, but we have to understand that in the last 2-3 years we have had these one-off shocks which obviously have distorted the speed with which the system becomes familiar with the GST regime. Therefore, we need to allow the system to settle down and become familiar and comfortable, which is what is happening right now, such that the average collection per month is slowly stepping up from 1 lakh crore to 1.4 to 1.5, etc. Whether there has to be only 1 or 2 or 3 rates can be debated ad nauseum. But when you have a country which is in a transition from lower middle income to middle income, etc., the path of GST settling down into a fewer rates than what we have will also take longer than, you know, it takes for us to debate this. And yes, the revenue neutral rate has come down, but at the same time, so far, if it leads to higher compliance and better transactions and better tax revenues for the government and greater efficiency, then probably we need to also update our estimate of what the revenue neutral rate is.
Okay. The second question that I had for you was to do with states. And, you know, we spoke about CapEx, central CapEx, which is at a 19-year high at this point in time, but the government is also incentivizing states to spend and supporting the states as well on that front. In your assessment, especially after the fact that the GST compensation window has closed as far as states are concerned, you know, what is your own assessment of the fiscal health of states at this point in time, and hence their ability to also go forward with the reforms as well as CapEx spend?
So, based on the revised estimates for 22-23, we do see that states are absorbing about 80% of the interest-free loan that the union government provided for CAPEX in 22-23. And we understand that as of now, the 22-23 state combined fiscal deficit would be probably around 2.4% of their GSDP, which is roughly 1% lower than what was expected. So on the face of it, I think states are doing their bit to consolidate, but we are also aware of the underlying issues of contingent liabilities, of power tariffs, viability of the power generation and discoms, etc. And now some of the states have indicated their intention to move back to the old pension plans, which will show up in their numbers 10 years down the road, etc. So there are underlying issues, but as of now, given the impact and the disturbance that COVID caused, states at the moment are on track to get back to a fiscal sustainability within the short-run parameter, while definitely I acknowledge that there are longer-term issues that need to be addressed.
Mm-hmm. You know, yes,
Let me also respond to this, you know. The states are also, let's not, I think we can't have also one picture of the states. Right. States are at different levels, and there are some states which are actually spending far more in capital than even the central government. In terms of, if you really look at GSDP as a percentage of GSDP, they're even spending more than what the central government is spending on capex. So therefore, there are states. It's a question of which state has got what kind of management and what kind of revenue expenditure. So, and secondly, I think in general the states are recovering because of, as GST is very important part of the revenues, and the other incomes which are exclusive to the states. There are several taxes which are exclusive to the states. There are certain non-tax revenue exclusive to the states. For example, royalty. Royalty on minerals is a non-tax revenue which is accrued to the states. Now, whenever the mineral sector does well, the metal sector does well, when the prices are good, the states garner a lot of money. But it is not all of the states which are there. Similarly, there is electricity duty which is exclusive to the states. It doesn't have the center thing. There's an excise revenue which comes out of portable liquor. There is also a GST. There is a VAT on petrol and diesel, which is over and above that, and VAT on also the portable alcohol, apart from excise duty. Right. There's the registration duty and a stamp duty, which is exclusive. So these are the several revenue sources within the state. So it depends upon when you have a pick-up in economic activity and growth, you would see a lot of those states, their revenues will go along with that, because there's a natural buoyancy to that. Okay. So I think the states are also coming on well, and there are several states which are, giving a lot of importance to capex. Yeah,
if you can stand up, they'll get a microphone right across to you, and yes, sir, go ahead. You have the mic already, and then I'll come to you. Rahul, I'll just come to you. Go ahead.
This is Surya Narayan Mishra. The thing is, in this budget, there is 34% is the debt, which has to be in the total budget. So, and in previous year also, the total debt is increased to 149 lakh crores. So, how the government will manage the remittance and the tenure of debt, interest payment and the capital payment, debt payment? This is the thing.
I think you mentioned about actually 34%. That interest payments, not debt actually, is it?
149 lakh is that debt as on the government, and that 34% is in this budget, the debt and liabilities is 34% total.
No, I think if you really see the interest payments to, how much of the revenue goes for the interest payments. Yeah. Yes, I mean, that's true. I mean, of course, if you are, our outstanding borrowings, you would be doing that. Yeah. Yes. But I think one of the steps that the thing is there, the budget is actually keeping this, the balancing task of managing, fiscal, moving towards a fiscal consolidation path, consistent with the needs for continued capex in our economy, so that our growth is also kept in mind.
Yes. Ladies and gentlemen, Rahul, go ahead with your question, and let me also take the opportunity to welcome on stage the Economic Affairs Secretary, Ajay Sheth. Mr. Sheth, could we have you join us on stage, please, as we take a question here from Rahul. A big round of applause, ladies and gentlemen, for the Economic Affairs Secretary. Go ahead, Rahul.
Yeah, this is the question to the Chief Economic Advisor, please. Sir, this is the question to you, and I just wanted to ask that, is there an estimate of the tax gap, the tax that ought to be collected versus tax that we are able to collect today in terms of the operation of the tax laws and enforcement thereof?
Off the top of my head, I can't give you the answer, but I'm sure it is there in some of the budget statements.
Economic Affairs Secretary, would you remember that number at the top of your head?
What did he say?
So I'm saying that what is the tax the economy of our size, economy of our kind should generate versus what's the tax that we actually collect? Is that reasonably converging, or is there a big gap or a small gap? How much is that gap, and what's the trend over the years on that gap?
Okay. If we can give an overall number, what we are collecting as an economy, I'm talking about center and states put together, is roughly about 17 to 18% of GDP is our tax effort. Certainly, it is on a rural size. If you look at just about the BRICS countries, only China has of this order. All other 3 countries have a much higher. And of course, advanced economies have 25% plus. And China is a different, much more controlled economy, or rather is a controlled economy. So we have to move to the path wherein first from 17, 18% we reach to 20% before we think of where we move further. And in the last couple of years, if we discount what happened during the pandemic, inching up like last year, getting 11% plus centers alone, tax to GDP ratio is a positive sign. And more automation, GST and direct tax simplification is moving to that direction. So yes, approach is more ratio, more people into the tax net, a moderate tax rate, that's the general approach.
So given the, please go ahead.
I just wanted to add to what Secretary Economic Affairs said. If you account for the per capita income of India and compare to the kind of tax to GDP ratio that today's advanced economies had at a similar stage of development, then our tax to GDP ratio between center and the states put together of around 18% that he mentioned is quite comparable at a similar stage of development.
Is quite comparable at a similar stage of development. I think, sir, there was somebody else who had a question here. Yes, sir, we'll get the microphone back to you in just a second. Go ahead. It's there, right there. Yeah.
So my question is to DPM Secretary first. You did mention about the national monetization pipeline, some things have been done in InvITs and other thing. But if you read the notes, you would be falling way short of the target in this year. Now, there are some very easy baits in national monetization pipeline which can be done very easily. Let's take a point of like a case of Ashoka Hotel. You know, these are the cases which government can definitely expedite. These are of no great value to the government as such, but can create a lot of revenue. So is there any specific target now? You're adding back the target, what you're going to miss here, and do an extra this thing in next year? And my another question to Chief Economic Advisor is, we have been talking about that, oh, if the recession is there, it is good for India. My question is a vicious circle. Fed and Bank of England have increased the interest rates today. What happens is the capital flows into the fixed treasury bonds. That's the safest bet to do. Our exports, once the recession is there, goes down. The current account deficit increases. My dollar goes up. Rupee goes up against the dollar.
Yeah.
And it's a vicious circle. So the money flow into India will get hampered. So your growth targets of 6 to 6.8, which your economic survey mentioned, does it get impacted? Have you factored in these geopolitical and the recession in the West?
Let me get the DPAM Secretary to start, and then I'll get the Chief Economic Advisor as well as the Economic Affairs Secretary to comment. Go ahead, sir.
Okay, and then national monetization plan, yes, I think you're right, you know, there's some sectors which are doing relatively better than some of the other sectors. Because, you know, if you say that if you're able to structure the things well, like for example in the road sector, it is fairly well structured, so therefore you can roll out faster. But in some of the sectors, like for example railways, this kind of models have not really worked yet. I think there were 1 or 2, you know, trials, but did not succeed. On the specific case of Ashoka Hotel, I can say the Ministry of Tourism is already working on it, and I think hopefully they should be able to work out a model and bid for it. So I think that's a part of their business plan.
Yeah, that's what I was going to say. Ashoka is actually moving forward. We don't know when it will finally happen, but perhaps the G20 year may not necessarily be the best time for the government to let go of it. But yes, Economic Advisor on the other question that the gentleman raised.
So if the advanced economies actually slow down, you are right, first of all, about your comments about the impact on export growth, etc. That is why I mentioned in the survey as well, on balance, which means we take into account both the costs and benefits of slowdown versus continued growth in the developed economies. And on balance, I have concluded that in the current context of where India stands on inflation situation in the world, etc., a slowdown would be more beneficial than a continued expansion in the developed world, because it would have a meaningful impact on oil prices, commodity prices. It would bring them down. Interest rates would become lower in the developed world compared to where they were last year. Currency pressure on currencies would come down. And even though exports may slow, on a net basis, net exports would do better because the impact on imports would be lower even if the currency strengthens in India. So we have factored that in and come to the conclusion that while there will be some pluses and some minuses, a slowdown on balance would be beneficial. But we have taken a range of 6 to 6.8 with a baseline of 6.5. And the fact that the baseline number is not centered between 6 and 6.8 does convey a story to you, which is that in the current global context, we do see that downside risks are more than the upside possibilities to the baseline number.
Mr. Chet, would you like to comment on that as well, just in terms of the global challenges as well as the point that the
Nothing to add to what my colleagues said.
Nothing to add. Let me then put a very specific question to you, because this has been long pending, India's inclusion in the global bond indices. Is there any further movement on that? Because we were given to understand that it was only a matter of time, and in the early part of 2023 we would finally move towards that, and the issues related to tax, etc., had been addressed and sorted out. Is there any clarity on that?
At this point of time, when there is quite a bit of things happening on the global markets, not the right time to look at that question with a serious thought. A better time will come when we'll have to address that issue.
So it's not going to be, this is not something that you're working on at this point in time, that it's not something that you're taking forward?
See, at this point of time, coming to the requirement of for the government borrowings, including that of the state government at the current level of projections, our domestic savings can well take care of that.
Okay. Let me then address the issue that has been raised by many overnight on the rural budget side, and there has been a decrease, there has been a decline there, and one could understand that on account of the lower allocation as far as NREGS is concerned. But if you could explain the thinking and the rationale behind what we've seen happen specifically as far as the rural budget is concerned, and why the decline?
It will not be a correct statement to say the rural budget has come down. Of one particular scheme is the NREGS, that allocation has come down, but that scheme is demand driven. People come for a wage employment because they don't have any other employment opportunity. And as we are seeing it, the economy is picking up, especially the services sector. There is a pull factor from urban areas, people migrating back to the urban areas, and they are getting the job opportunities there. But an equally important, what the fiscal is trying to do, for rural housing, budget has gone up from 20,000 crore to close to 55,000 crore, 54,400 and plus crores. So increase of 170%. Who are the people who are going to construct? Machines are not going to construct. Those houses will be constructed by human beings. So there will be a job demand will be coming in. Similar manner for drinking water, rural drinking water, budget has gone up from 60,000 to 70,000. Of course, part of it will be material, but a significant part will as well be material, because that all has to be embedded below the earth. So these two significant increases which generates job or wage employment in the rural area more than compensate for what has been the reduction in terms of NREGS, but that is based on assessment that demand for wage employment will be less in the coming year. And if it were to be contrary, then obviously through revised estimates, suitable provisions will be made.
You know, one of the things that I want both you as well as the Economic Affairs, the CA, to comment on is the fact that the budget has very clearly said that it may not be reliable due to the unprecedented global turbulence and headwinds to put the 24-25 and 25-26 targets as part of the FRBM, and that is what you have stated. So just wanted to understand, because you seem very confident, and yesterday the Finance Secretary also said that we shouldn't have a problem of being able to consolidate 0.7% annually over the next 2 years to get to that number of 4.5%. Why then haven't we placed the glide path in the budget?
It's a question that when we are trying to project beyond a year and over a period of 3-year time, then we have to be sure that assumptions which are making have a reasonable chance of holding on. What we have to look for in terms of the correction, about 2 percentage point over a period of 3 years, whether these are divided in 3 equal sizes or they are different. Now we have taken one slice, 0.5%, and that 0.5% is decided based on our assessment that next 1 year public investment has to play a very strong role along with the private sector investment coming in to keep the growth momentum on. That's why a 0.5, not a 0.7. Now, next 2 years, whether the second year can take a more than half of that, 0.7 or more or less, depend upon how we see the situation evolving and the global headwind subsiding by that time. That's why a firm commitment, once an act is amended, laid down, becomes a difficult one. But very, very clear that come 2025-26, we have to reach below 4.5%.
Okay. Do you want to add to that, CA?
No, certainly, I would say that in a situation when we are facing extreme uncertainties, both politically and economically in the world, the intent and the delivery matter more than the mechanics. And the government has stated its intent in the Honorable Finance Minister's budget speech, and also reiterating the glide path. And that, I think, also offers a certain flexibility to respond to the situation as it emerges, while keeping an eye on the glide path of 4.5% or below. So as and when the global environment stabilizes, hopefully in the second half of the decade, then we can think about institutional mechanisms.
Okay. Let me ask the three of you about the growth magnets, and I'll start by asking you, since that was something that the economic survey mentioned very specifically. You know, of the areas of the priorities that the government is working on, has identified, what do you feel the most confident of in being able to really turn the needle as far as accelerating growth is concerned?
I think the first growth magnet for us will be improved balance sheets, improved the private sector capex cycle will commence, and increasingly third will be the public digital infrastructure contribution to growth, because it is going to address two problems that India has been facing historically. One is informality and financial exclusion. Both are being addressed. So all these three things are going to be important growth contributors.
Mr. Sheth?
Some of the signs which are seeking, not in just in terms of the consumption, but we also see in terms of the taxation data which is coming in, even especially in terms of the GST data, and also the gross fixed capital formation, which have been the highest in the first half of the year since 2014-15. These are the signs that economic activity is reviving very strong, and I see that momentum going forward. And when we are talking about growth accelerating, when the adverse external environment is adverse to us, the first goal is to stay closer to 7%, which we are trying to achieve this year, and before, when the global headwinds subside, then think of beyond going 7+.
Okay, yes, and that is the aspiration, that hopefully we will be able to do 7% plus. Gentlemen, it's been an absolute pleasure. Many thanks. I know that you have another engagement to get to, so I don't want to hold you back, but thank you very much to the DPAM Secretary, to the Chief Economic Advisor, as well as to the Economic Affairs Secretary for joining us here on the CNBC-TV18 Budget Verdict. We appreciate your time, and thank you very much for joining us here with your insights. Ladies and gentlemen, a quick break, a big round of applause for our secretaries. We're going to be back with Nitin Gadkari, the Road and Highways Minister, in just a short while from now. Thank you very much for joining us. Thank you so much. back. You're watching the CNBC-TV18 Budget Verdict, and it is my pleasure now to invite on stage the Road and Highways Minister, Mr. Nitin Gadkari. Sir, could you please join us on stage? Ladies and gentlemen, a big round of applause for Minister Nitin Gadkari. Mr. Gadkari, thank you very much for joining us here on the CNBC-TV18 Budget Verdict. I know you've come very well prepared with all your targets that are in your hands, sir, so let me get straight to it. This has been a capex-heavy budget, a budget where the government continues to do the heavy lifting as far as public investment is concerned and infrastructure. A big outlay for your ministries as well, almost 2.6 lakh crore rupees being allocated. Let me start by asking you about how you intend to spend all of that money.
Actually, frankly speaking, this is really a great thing for that the government has given highest priority for the development of road infrastructure in the country. Under the leadership of Prime Minister Modi ji, our dream is to make Indian road infrastructure equivalent to USA standard before end of 24. And that's the reason that because of new Green Express Highway, whatever the new highway we are making from Delhi, Mumbai, Chennai, Bangalore, even a lot of projects are now with us. I feel that this is going to helpful for me for making more expenditure on road construction. But at the same time, the strength of my department is when we actually launch our InvIT model in Mumbai Stock Exchange. And the time was given for 10 days. And within 7 hours, it is 7 times oversubscribed. So today the response from the capital market for our road construction, particularly through NHI, is really very, very remarkable. And I feel that this is a golden era in the history of India, that we are making the road infrastructure of international standard. We are double the number of airports. We are developing waterways and the water, power, transport and communication. These are the most important thing as far as the development of the country is concerned. And because water, power, transport and communication, we will get industry. Industry 100% will get capital investment, and that is going to create more employment potential, and we will be succeed into make eradication of the poverty in the country. So exactly now we are the fastest growing economy. We are just jumped from 10 number to 5th number. And even in automobile sector, which is concerned with me, actually, we are number 4th. Now we just bypassed Japan, and we are number 3rd. And I am very much confident about it that in due course of time, within 5 years, our automobile industry presently size of 7.5 lakh crore, we want to make it double of 15 lakh crore. This is the industry which is giving 4.5 crore jobs and giving maximum revenue as a form of GST to the central and state government. So totally this government is going to increase our GDP growth, creating more employment potential, and it's going to increase our export and reduce our import.
So, Mr. Gadkari, I know that you give all your officers across ministries targets. So I'm going to ask you, sir, what is the target that you've now set of how much they have to build every day?
Actually, when anything I am declaring about the target, the media people are taking it as my commitment. The target is always high.
But you've delivered on your commitment.
Yes, presently we are 40 kilometers per day, and now every year we are giving contracts, awarding contracts of 13 to 14,000 kilometers. But now we will taking this target going up to 24,000 kilometers for awarding contracts. Presently we have 38 to 40 kilometers per day. It's again a target, it's not my commitment. Now we want to go up to 45 kilometers.
I thought you'd be like Salman Khan, Mr. Gadkari, and say, commitment de di to commitment de di.
It's not so easy. But one thing which I will assure you, up to the end of this year, the flight from Delhi to Dehradun, Delhi to Jaipur, and Delhi to Chandigarh, they will be closed.
Mr. Scindia is not going to be happy to hear that at all, Mr. Gadkari. I think Mr. Scindia is going to take great umbrage to what you've just said, that those flights, the regional connectivity flights, are going to have to shut down because of the roads.
Because presently we are making new road between Delhi to Dehradun within 2 hours, Delhi to Haridwar in 2 hours, Delhi to Jaipur, just at the 12, Prime Minister is going to inaugurate that project. It will be 2 hours. Then Delhi to Chandigarh, 2.5 hours. Delhi to Amritsar, 4 hours. Delhi to Katra, 6 hours. Delhi to Srinagar, 8 hours. Bangalore to Chennai, 2 hours. And Bangalore to Mysore, 1 hour. So the way in which we are making the road, so people will not use air because you have to go to airport 1 hour before. Then from house to airport is 1 hour. Then again there is a delay. Then it goes to 45 minutes to go from there. Again going to home 1 hour. So it takes 4 hours. We will offer you the service within 2 hours.
Why is the government then building 50 new airports?
So you don't bother. There will be, aviation is an industry in India where the growth is 22% per year. So there are a lot of opportunity for aviation company that they can start Chandigarh to Hyderabad, Chandigarh to Pune. So they can get good business. That is what.
No, but on a serious note, and I want to address the issue of the auto sector since that is something that you spoke of. And one of the big focus areas of the government has been the green growth aspect. Within that, the electric mobility cause is something that you and your ministry have been championing. So what should we expect now? Do you believe that the time has come for the government has done its part, the subsidies have played their part, it is now time for the industry to step up and do its own thing? Or do you believe that the era of subsidies needs to continue, so which means that FAME should get an extension, the FAME scheme of subsidies should get an extension?
Actually, this green subject is very much touching to my heart. From 2004, I am working like a mission on alternative fuel. Ethanol, methanol, biodiesel, bio-LNG, bio-CNG, electric and hydrogen. So today, it is really, I am very much happy about the Finance Minister's speech about green building, green fuel, green energy. And this is really going to change the scenario of the country. Actually, we have the import of the fossil fuel of 17 lakh crores. There is a huge potential is available. I remember many times you have already taken my interview. The people were asking me about the electric car, electric scooters. Now today there is a waiting list. So even hydrogen mission, there is a provision for 19,000 crore. And now the hydrogen from coal is black hydrogen, hydrogen from petroleum that is a brown hydrogen, and green hydrogen that is from water and biomass. So my actually mission is to make our farmers, presently they are annadata. My dream is to make them urjadata. And we want to involve agriculture. And the most important thing is waste to wealth. In the finance minister's speech, they are going to select 300 industries. Now from Parali, rice straw, we are going to launch a scheme that presently we have a requirement of bitumen of 80 lakh ton. Out of 50 lakh ton is coming from refineries and 30 lakh ton is import. Now we have got the successful technology from Central Research Road Organization and CSR that from Parali we can get 70% biobitumen, which is proven to be quite better than petroleum bitumen, and 70% bitumen and 30% biochar, that organic carbon which we can use in agriculture. So now a whole Parali is burning in Punjab and Haryana, so tractor molded unit, they can make it. The other important thing is from 5 ton of Parali is giving 1 ton of bio-CNG or bio-LNG. So government is now encouraging that all type of industry of alternative fuel. That is also a good thing. Second thing, by using biotechnology, we will increase the productivity of biomass, just like Napier grass, bamboo. Already we have one plant in Assam. They are making bioethanol from bamboo, and one plant from Indian Oil in Panipat, where we have 1 lakh liter of bioethanol from rice straw and 150 ton of biobitumen per day. Now in Ahmedabad, we are making express highway, Dola Road, Ahmedabad something, where we are using 20 lakh ton of municipal solid waste in the construction. Now we are making the policy for using of municipal solid waste into road construction. Then we are using the waste tire, where we get the rubber powder, and the rate of that powder is 25 to 30 rupees per kg, and bitumen rate is 50 rupees. So adding 15% rubberized into that powder into the bitumen, the quality of bitumen is going to be, it should be good quality. And now this type of recycling industry, either it is scrapping, either it is you are using plastic, or we are using solid waste everywhere in the road construction, it can be a great thing. And this recycling of the industry is going to create more employment potential, and it is going to helpful for the growth of our economy.
Sir, that was a very passionate argument that you presented for why we should go green, but you passed my question. Now, that was a Pele pass. Do you genuinely pass my question, or you forgot my question as far as the FAME subsidy scheme for electric mobility is concerned?
I will give the answer. Presently, because of the economic viability, you just understand. Everywhere, 4 important things are there: proven technology, economic viability, availability of raw material, and marketability of the finished product. Now the electric vehicle, we have 400 startups who are making electric scooters now in India, and all are now doing good business. And day by day, because the number is increased, the cost of lithium ion battery is now every day it is going to reduce. And that is the reason that presently, just I will tell you 2 things. In just 2 days before, I was in this construction equipment expo there in Noida. Now we have got all type of heavy industries machinery, construction equipment on electric. Before that, the Auto Expo was there. One of the beautiful truck on green hydrogen and also on CNG and petrol. Then Tata and Leyland, they launched their truck, IC engine on hydrogen. Then today we have got lot of engines, machines available on alternative fuel, on electric. I feel that the total scenario is going to change. And because the size presently the requirement is less, but the number is increased, the cost is reduced. That's why I feel that the industry don't need subsidy for that. But already, as far as the petrol car, the GST is 48%, and for electric car it is 5%. It is also one type of subsidy. And because of the reduction in the cost, particularly the alternative fuel vehicle, now we are going to start flex engine. So I feel that now no more subsidy is required for that.
No more subsidy is required. I think there's going to be a panic within the electric.
But it is one thing I want to clear it. It is up to the finance minister and heavy industries ministry. They are looking after all the things. It is up to them to decide the question. But because of the present scenario, the cost of finished product which is coming, and day by day it is actually lithium batteries also cost is reduced. Now there is an alternative for aluminum ion battery, zinc ion battery. Then aluminum air technology is very good technology developed by Indian Oil Research Laboratory. So I feel that now this is the time that the cost is reduced. That's the reason I feel that for economic viability, that now they don't need subsidy. It can be economically viable.
Okay. Let me move on and talk about something that the government has been wanting to move faster on, and that is asset monetization. You know, there was a big target that was set out as far as the national asset monetization pipeline was concerned. You talked about the InvIT and the kind of subscription that you saw, but as far as your ministries are concerned, what can we expect on the asset monetization side?
Actually, frankly speaking, we have different type of models. One is BOT, build, operate and transfer. Then at the time when I taken charge as the minister, there was toll project. You remember at the time, 406 projects involving the cost of 3,85,000 crore. My ministry has saved the Indian bankers from the NP of 3 lakh crore. We resolved the issues. So that time we have opened the new model, that is hybrid annuity. Then now we have got even we can make the project on EPC mode and we can monetize. Then we have TOT models. But the InvIT model is supposed to be the best. Now it is my intention that we want investment not from the big group, not from the foreign investor. But the people like you who are journalists, the salary and people, the pensioners, we are giving them 8.5% returns per year, and we are going to add their interest every month in their account. Now the deposit in the bank, the interest rate is maximum 5.5. We are giving 8.5, and that is the reason that our priority is to take more investment from the small people and make the roads and giving that benefit to the people. That is exactly we want to do it. My ministry, my budget is so good, and I don't have any money problem. My problem is how to make the expenditure of all this budget which is with me. And today I have called the meeting of my officers and tell them, you have to complete this budget before end of December.
Before 8th of December?
Yes.
Why 8th of December specifically?
Because then January, February, March, I can go to finance ministry or asking me give me more money.
Well, so that's the headline coming in from Nitin Gadkari. 8th of December, the allocation, the capex given to his ministry should be utilized.
I want to tell you again one where I need your cooperation. When I was water resources minister, in Mathura, we have taken one project for 80 MLD sludge of Mathura. The project was in hybrid annuity. The project was actually awarded to Triveni Engineering Company, and now the 40% grant in aid given by the department and 60% raised by the contractor. And every year 80 MLD of sludge they are making water, purified water from it, giving it to Indian Oil Refinery, and they will give them 20 crore rupees per year. So my suggestion is this hybrid annuity, and all these models are now good for solid waste management, liquid waste management, railway, power line, everywhere. And that is the reason that our Prime Ministers insist on that you have to monetize the project and raise the money. As far as road project is concerned, I don't have any problem. Our toll income is presently 40,000 crore. Now we are diverting towards automatic number plate link with the satellite system. So up to end of 24, our toll income will be 1,40,000 crore. And you just take example, if I can monetize that, how much money we will get. So presently in the road sector, we don't have any problem about the resources and capital. We don't want to go to anybody for investment. We are happy, and all our projects are economically viable, and our internal rate of return is more than 14, 15, everywhere the projects are profitable.
Well, you know, it's very rare that you actually hear a minister saying that I'm happy with where things are. I don't want any more money from anybody. You know, you're being able to deliver on the targets that you have. But, you know, I want to talk about this toll collection number or target that you have laid out, 1,40,000 crores.
Actually, in our FASTag, we have the success story is now 98.5% the income which we are getting from the FASTag. So we need to reduce our leakages there. And by automatic number plate linked with the satellite, which within 3 months we are going to launch that system, I am 100% confident that there will be no leakage, and our toll income is now very good. There is no problem for that.
You know, you said that money is not a constraint for you. What are the big challenges? What are the big constraints that could hold back the utilization of the allocation?
Actually, frankly speaking, the most important thing that without land acquisition, how we can going to construct the road? And land acquisition is related with the state government. Then the second problem is environment and forest clearance from state government and central government. Third is, the basic problem is judicial problem. When anywhere we start the work, some court has given the stay and we cannot work. But we are resolving. I always telling to my people that there are some people who convert problems into opportunities, and there are some people who convert opportunities into the problem. So there is no problem now. We can resolve the problem. We have good coordination, cooperation and communication between the state government and central government. I always meeting with the chief minister, talking to the chief secretaries, taking the meeting for that. So everywhere in the Assam, I am telling you, there was some problem. But the initiative taken by the Assam chief minister, And actually now there is no problem. In the northeast, you go there and visit, see the road development. Everywhere the work is going on. You go to Jammu and Kashmir, we are making already road, tunnels and roads of 1 lakh crore. We are making big tunnels there, you can see. There are problems, but it is really important for the department and for my officers that we need to resolve that issue, and that is exactly the important test for all of us, and we have to do it.
So what is going to be the priority for you in this year, besides, of course, spending all the money that you've got so that you can go back to the finance minister for a higher allocation? Of course, the next year is going to be a vote on account ahead of the general election. But what are the key priorities that you're going to be focusing on for the year ahead?
Actually, my priority in my department is road safety. And that is the only subject my track record is not good. Every year we have 5 lakhs accidents, 1,50,000 deaths. And the death of the people, the age is 18 to 34, 60% young people. Actually, this is very painful. I am trying my level best. We are taking a lot of things for that. And the other important thing is the pollution on highway. Now the scrapping. This is very important for the economy. The 9 lakh vehicles from the central government, and I said 30 to 35 lakhs from the state government, the finance minister declared the scheme. This 50 lakhs vehicle, if the scrapping is there, they are going to purchase new vehicle. Again the GST, the state government, central government, again they will get it from that. And because of scrapping, we can reduce the cost of automobile components by 30%. We are importing aluminium, copper, plastic, rubber, everything. Because of recycling of this material, we will reduce the cost. And today, we are number 3rd as automobile industry is concerned in the world. My target is within 3 years, up to end of 24, we will cross at least 2 lakh crore more. And after 5 years, we will be 15 lakh crore of the industry of automobile. All reputed automobile brands in the world. All are present in India, and that is to be most important thing, that by reducing the cost, our export will be increased and to create more employment potential in the country, and that is to be a great achievement for the government.
Sir, you brought up the scrappage policy, and I know that this is something you've been championing, and again 1,000 crore rupees has been allocated for the scrapping policy in this year's budget as well. But it hasn't taken off yet. Why do you believe that that's the case? And the second question, I think this is a question that many consumers have, that if my vehicle is not polluting and I pass all the pollution checks and I am within the emission standards and the emission norms, then why would you put a mandatory timeline on scrapping that vehicle? I mean, that is of course different according to different states, and there are court orders as well. But why the mandatory scrapping if you meet the pollution norms?
Actually, you are not correct. The 15 truck, new truck, whatever the pollution from them is equal to 1 truck before 15 years. And because diesel is so hazardous, and Delhi, when every time I come into Delhi, the infection is there. It is really a serious issue. And alternative fuel like flex engine, where you can use 100% bioethanol in place of petrol. Toyota is going to launch the models. And where the rate of the ethanol is 60 rupees per liter and petrol is 120 rupees per liter, and their flex engine creating 40% on electricity. So this is to be a game changer. Now the Bajaj, TVS and Hero, their bikes, scooter and auto rickshaw available on 100% bioethanol. So this is the green fuel. This is from agriculture. And presently our import is of 16 lakh crore for fossil fuel. And the economic problem is there, at the same time pollution is a problem. What the Prime Minister feeling is the ethics, economy, ecology and environment. These are the 3 important pillars of India. And that is the reason that we need to reduce the air pollution. And air pollution is a so bad subject. So really it is, people are facing the problem because the Delhi people are already facing this problem. This is the time for all of us to fight with the pollution. We need to reduce air pollution, water pollution and sound pollution. And that is exactly the green energy, green building, green fuel, green power. Everywhere we need to concentrate on the green philosophy, And that is the need of the world, that is the need of the India, and that is the exact line of our government. I'm really very much, this subject is touching to my heart. And the green thing and conversion of waste into wealth. No person is waste, no material is waste. It is depending upon the appropriate technology, appropriate vision of the leadership, that you can convert waste into wealth. From 7 years before, in my constituency in Nagpur, we are selling our sewage water to Maharashtra government for power generation, and we are getting 300 crore rupees per year from selling of sewage water. That's the reason I was telling you the good example of Mathura. So this is the time that in solid waste management, liquid waste management, everywhere on PPP mode, even hybrid annuity, we can make the project.
Well, I think you're absolutely right. As far as pollution is concerned, we need to deal with it and address it on a war footing. People are suffering not just in Delhi, but the AQI in Mumbai is worse than Delhi over the last few days. So it's not just a Delhi problem. It's an India problem that needs to be addressed. But Mr. Gadkari, before I let you go, you said that you have no problem as far as money is concerned. You have plenty of capital. The constraint is
actually, I will give the example. When I was in Mumbai, I was minister. I constructed that Worli-Bandra ceiling project, Mumbai-Pune Express Highway, and 55 flyovers in Mumbai. At that time, my position was very bad. Only 5 crore rupees was with me. I raised the fund, and the credibility was not that much. I get the fund raised from the capital market. We construct Worli-Bandra, Pune, Mumbai, and all 55 flyovers. Just 6 months before, the Mumbai-Pune Express Highway, the government auctioned that, and they get 10,000 rupees from that. So making the road on public-private investment is now giving more profit to the government. All projects are economically viable. So where the economic viability is there, 100%, if you want good services, you have to pay for it. And that is the reason I feel that a lot of infrastructure projects, the economic viability is there. There are constraints with the government. We need to have more expenditure in agriculture, rural and tribal India. Jal, Jameen, Jungle and Janwar, on the basis of that we have to make more industry, more innovation, more research, creating more employment potential. That is the need of the country. And where economic viability was not there, so we can use all budgetary funds there.
Well, Mr. Gadkari, it's been an absolute pleasure. Thank you very, very much for joining us here at the budget verdict, for laying out the roadmap as far as the roadways are concerned, and for sounding that caution for your colleague in the cabinet and in the government. Mr. Scindia is going to be worried after what you shared with us here this evening. But thank you very, very much. Ladies and gentlemen, a big round of applause for Union Minister Nitin Gadkari. Thank you very much, sir, for joining us here this evening. Welcome back. You're watching the CNBC-TV18 Budget Verdict. It is now time for the grand finale. Joining us here on the Budget Verdict stage, we have a power-packed lineup of the budget makers as well as key policy makers. Please join me in welcoming the CEO of the Niti Aayog, Parameshwaran Iyer. Ms. Iyer, could we have you join us on stage, please? Also with us, the Chairman of the CBDT, Mr. Nitin Gupta. Mr. Gupta, could we have you join us on stage? The Chairman of the CBIC, Mr. Vivek Johri, also here with us on the CNBC-TV18 Budget Verdict. Also with us, the DPIIT Secretary, Mr. Anurag Jain. Mr. Jain, could we have you join us on stage as well? And the MNRE Secretary, Mr. Bhupinder Singh Bhalla. Gentlemen, thank you very, very much for joining us here at the CNBC-TV18 Budget Verdict. Appreciate your time and thank you for being here with us in the concluding session of the CNBC-TV18 Budget Verdict. Mr. Iyer, let me start by talking to you, and the microphone is right next to you, sir. You know, when we last spoke, you said that you believe that this is a bottom-up budget. It's a budget that has delivered on the aspirations of every constituency across the country. What, to your mind, has been the biggest force multiplier as far as the budget announcements are concerned?
Well, I think there are a couple of things, Shireen. One, of course, is the huge investment in CapEx, you know, that huge increase of 10 lakh crores. In addition to that, the continuation for another year of the 50-year interest-free loan to states. So extending that and actually incentivizing the states as well to come in with their own CapEx and attracting private investment. I think those are going to be key. But then if you know, that's going to have huge positive spin-offs in terms of jobs, employment, etc. But the other part of the budget, which I think is equally important, is the thrust on the social sector. And that's pretty much where Niti Aayog is working with states under the State Support Mission, which was referenced by the Finance Minister yesterday, of taking development right down to the grassroots level. How can states create their own state institutes of transformation like Niti? How can they move from planning to development strategy and really take it down to the block level? And perhaps one of the most significant features of the budget was the focus on inclusion, the particularly vulnerable tribal groups, PVTG. So this new mission which has been announced is actually for the tribal community, the bottom rung of the tribal community, 15,000 crores, 3-year in mission mode to give them, provide basic services. I think that was a very, very significant announcement of inclusion.
Yes, inclusion, of course, was one of the strategic priorities identified by the budget. But let me get the CBDT chairman into the conversation. And so, you know, you've got an audience here who currently are perhaps doing their calculations, talking to their chartered accountants, whether they should switch from the old tax regime to the new tax regime or not. And I'm sure there's plenty of feedback that you've got overnight as well. But what is the pitch that you would like to make to the citizens, to taxpayers at this point in time, on why you believe it makes sense to move to the new tax regime?
See, the new tax regime is beneficial to the taxpayers in terms of the money which it is leaving in the hands of the taxpayer. The choice is with the taxpayer to decide whether to opt for the new regime, the proposed one, or the old one where they are as of now. Then there are issues regarding the compliances. The new regime makes it simpler to file the return of income. And as far as we in the tax administration are concerned, the evasion which we have noticed in certain cases is going to be taken care of because wrongful deductions have been claimed by the taxpayers. We have come across such cases in terms of Chapter 6A. So all these things will be taken care of. But as a citizen, as a taxpayer, the choice is with the taxpayer himself or herself to decide what way is beneficial to him or her and choose the option.
Well, yes, that option has been left with the taxpayer, but you also believe that this is, not believe, you do say that this is the new default tax regime. So I want to understand from you, as you were doing your scenario planning, of these 5 slabs that have been now put forward as far as the new regime are concerned, where do you believe you're likely to see people shift to? Within which bracket do you foresee people finding it more attractive to move to, especially cases where HRA, etc. is a factor? Do you believe that that will be a constraint on people making the shift?
We think that at every level the shift will take place. up to 7 lakh, and in case of salaried employees 7.5 lakh, the shift is definite. From 7.5 lakh income to 15 lakh of income, depending upon the deduction claimed by the person, he or she has to decide whether it is beneficial or not beneficial. And above 15 lakhs, our calculation shows that it will be beneficial to everyone. With the reduced surcharge, above 5 crore, definitely.
Okay, well, that's the pitch that's coming in from the CBDT chief himself to get people to move to the new tax regime. But Mr. Johri, let me come to you with the priorities as far as the CBIC is concerned. And the clear thrust as far as the budget is concerned is to try and bring down the cost of doing business and ensure that there is an improvement in the ease of doing business, and that is what the CBIC is also hoping to do. There has been a significant rationalization, as you pointed out, on the customs front as well. What's going to be the priority this year? What do you foresee as the big challenges as well for you?
So let me begin with customs. And the rate rationalization that you talked about is itself a very big step, because it's a very sharp cut in the number of rates. From 21 to 13 is a very sharp drop. And this is just the beginning of the process. So I think that is one theme that we'll take forward in future budgets in trying to control rate dispersion. On customs, the major challenge we are facing today is undervaluation of imports. We've been tackling it. In the last budget, there was a major announcement made with regard to some changes in the valuation provisions. That is yet to be implemented. The rules have been framed and we have the infrastructure ready for doing that. But in the coming year, we'll see the implementation of that provision. The other aspect which we've been dealing with in customs, more effectively we're trying to deal with it, is the misuse of free trade agreements. And to speak to that, we also made certain changes in law the year before last and in the preceding budgets. That is now settling down, and we'll be in a better position to assess in what manner free trade agreements are being misused, and we'll be able to come up with some policy response to that. On the GST side, although I must clarify, GST is not part of the budget. It is an ongoing process which emanates from GST Council decisions. But on the GST side, also, I think the emphasis is going to shift in 3 areas. One, in expanding the taxpayer base. So, although the taxpayer base has grown quite substantially since the time GST was introduced, when you compare it with other taxes, and that comparison is very often made quite naturally, you find that there is potential to increase the GST taxpayer base. So 1.4 crore is perhaps not good enough for a country of India's size, and we are trying to use technology to come at it, to do more data triangulation, so that we can at least assess for ourselves whether the potential for increasing the taxpayer base has been fully tapped or not. So that's one area, where there's definitely going to be a lot of work done in the coming year. The other 2 areas also speak to compliance, and I've been talking about how we need to ramp up our audits and scrutiny of returns. We've already got our act going on that, but we are going to work more collaboratively with the states, particularly in the area of audit. So those are the priorities that I can see for.
I want to get both you as well as the CBDT chairman to comment on this, and I think there was a question that was posed earlier to the Revenue Secretary as well as the Chief Economic Advisor on what you believe the gap is between where the tax base should be and where it currently is at. And you said that that is going to be a key focus area for you. So let me start by asking you, how large is the gap today on the back of what you are seeing, at least from the data that you've been able to collect via the GSTN?
We don't have we can just make intuitive comparisons. So if I were to compare the GST tax base with direct taxes, there's a huge gap. So they're doing about 7 to 8 crore taxpayers. We're doing just 1.4 crore. So that is one indicator that there is enough room, to tap. Also, intuitively about certain sectors, we're very clear that all the taxpayers who ought to be registered with GST are not there. For example, B2C supplies is one area that I'm I'm just naming, for you. Likewise, import of services is another area where we feel that the gap has not been fully closed. So these are some of the indicators that I have, but of course I don't have concrete data to share with you to say that the gap is of the order of so many crore.
No, fair point. I appreciate that. CBDT Chief, let me ask you that question as well. How many are still evading the net?
See, we have been regularly pursuing this area, and though as CBIC chairman has stated, it's very difficult to gauge it. But if I take a yardstick of the number of taxpayers which are filing return of income every year, we are finding that the rate of growth is around 5%. So every year we are finding around 5% new taxpayers are filing return of income. So with that thing, we are thinking that yes, that is the room available as of now. And if we pursue technology and what schemes have already been unfolded during the current financial year, the pace could be better, and that would be speaking about the gap between what the person is on the tax net and not.
Mr. Jain, let me come to you because, as I said, a large thrust on ease of doing business, reducing compliance, as well as encouraging private sector participation across a whole host of industries. I wanted to get your comments and your assessment on where things stand as far as a couple of government schemes are concerned. PLI, various schemes across 13 sectors in various, various forms of rollout at this point in time. Which are the ones that you feel satisfied with, where the progress you feel satisfied with? Where do you believe there is distance to be covered and work is underway to ensure that you push things along? Let me start by asking you about PLI before I get to Gati Shakti.
PLI, as you know, is one of the most important schemes for giving thrust to and creating global champions. The way we look at it, the sectors which we selected were basically based on whether there is a potential for a particular sector to create global champions in the country, whether this particular sector is of a strategic importance to the nation, or whether does it have a very high employment generation potential. So these are the three tests on which we actually consider a particular sector. But you'll have to understand the way PLI scheme operates. If in year one, I give a particular approval to a particular company, it has to make investments.
Yes.
Investment cycle takes time. So typically in most of the schemes, the investment period granted is 1 year or 2 years, depending on the choice of the company which wants to take the benefit of the PLI. So suppose it takes 1 year benefit. It wants to complete the investment in 1 year. So in the year 2, it will make the investment. Year 3 will be the base year of production.
Okay.
So year 4 will be the claim. So what has happened, some of the news items said that only 15% of the investment has taken place, only 3-4% of the money has been claimed. So let me put it straight. What has happened in most of these schemes, the investment is supposed to be completed over a period of 4 to 5 years. Say typically in a scheme, I say 15% of investment is the benchmark for year 1, 35% is year 2, 65% is year 3, 100% is year 4. So at the end of first year, how much would be the investment? 15%. If you put 15 in the denominator, it will be 100% performance. And if you put 100 in the denominator, it will be a 15% performance. So in the first year, the actual performance, if you put in the denominator, the target for the first year, it was 106%.
Okay.
Okay. Similarly, on the claims. So the schemes have actually started in different periods of time.
Yes.
So this year, we expect by March that out of 14 schemes, 7 would have got their first claims. Okay. Especially which were the early birds would make larger claims. So most of the schemes are by and large, there are certain minor hiccups which are there in implementation of any scheme. So concerned departments are continuously hand-holding all these investors, and I hope that, the way CEO Diti and we normally coordinate and review at our level, and then there's an empowered committee which is chaired by the cabinet secretary, that also reviews.
invariably it's only minor hiccups, no major hiccups.
Ms. Iyer, let me get you to comment on that as well. Minor hiccups, no major hiccups. And thank you again, Mr. Jain, for explaining how the PLI scheme, the incentives and the claims work, because often that's not understood. And he's absolutely right in pointing out that there have been different rollout timelines across different schemes. We started with pharmaceuticals, and of course that was the very first PLI scheme to be rolled out. And then of course there was the COVID uncertainty as well. But in your assessment, what has been the biggest factors that are working as far as these 14 schemes are concerned?
I think first of all, Shireen, like Anurag said, I think the first factor is the selection of these 14 sectors. That itself has been very significant. And then of course, it's the industries coming forward, the very close monitoring, and I think the hand-holding and the facilitation for the industries, coordination with the state governments, getting the land acquisition, the electricity, the water up and running, and we do a very close monitoring. And so already about 800 crores, 800 worth of incentives have already been approved. We expect 3,000 to 4,000 crores before the end of March. And of course the earlier sectors, pharma, mobiles, they're moving quicker. And I think others are learning from that process. So it's well underway, and we're very optimistic about how this program is going to transfer made in India and manufacturing in strategic sectors in India.
You know, one of the...
Sir, may I just
yes, please, sir.
Two things. Sir, what happens is the simplicity of the scheme is very important. The claim is dependent only on the production and nothing else. So that is very easy to verify with the GST, tax registrations, etc. So there are no administrative complexities involved in passing the claims. That is one of the biggest and important factors to my mind.
And you're absolutely right. That is a big factor, and certainly a big factor as far as industry is concerned. But Mr. Bhalla, let me come to you. One of the areas identified as a priority area has been the energy transition. This has been a budget that has identified the green focus, and an allocation of 35,000 crores, if my memory serves me right, has been made for the energy transition to OMCs, etc. You know, I want to understand from you, there's been a significant distance that's already been covered, especially when we talk about renewable energy. How confident are you feeling at this point in time as the world also makes this shift about India's own goals and aspirations?
Yeah, as you know, India has set a target of meeting 50% of its installed capacity, electricity installed capacity by non-fossil fuels by 2030. We have, right now we are at around 42%. Of the installed capacity, of the current installed capacity. Of course, looking at what our target is of how the energy would grow, we expect that we will need to add about 200 gigawatts or something of that sort of renewable capacity in the next 7 years. So it will be a spread of solar, wind, hydel, and bioenergy, and so on and so forth. Our expectation is, and what we are moving very confidently towards is, over the next 7 years, we will achieve 500 gigawatt. In fact, while we have committed, internationally committed to install 50% of our installed capacity from non-fossil, but Prime Minister has set a target of 500 gigawatt. So that's what we are aiming at, and we are very confident of achieving it.
What is the constraint or the challenge that you believe you're faced with in being able to get to that target? You know, Mr. Gadkari was here and he said, capital for me is not a problem. I have enough and more of it. How much of a factor is capital, and what are some of the other constraints that could get in the way of you being able to get to the 500 gigawatt target?
See, if you do the numbers, I mean, we have estimated that we will need about 23 lakh crore of investment in renewables for the next 7 years to reach the target. And of course, part of it would come from equity, part of it would come from, the balance would come from a combination of debt instruments as well as bond market. Equity, we are very confident that the private sector would be able to achieve. As you know, we are actually, the expansion of renewable capacity in the country has been spearheaded by the private sector. And the systems have been set are so robust, and there's so much of excitement when the new bids are invited, that I think there's no dearth of investments. In fact, a lot of international investment funding is coming in into the sector. So they will be, of course, financing will be one of the criteria, one of the factors which would lead us to reach it. But it would not be a constraint as far as we are concerned. Second is whether do we have the capacity to produce enough solar and wind equipment in the country. As you know, you've seen the last year what supply chain issues we faced, the prices which rocketed, not only in other sectors but also in renewables. But with, as Anurag just mentioned, the PLI scheme, for example, for solar, we have already done PLI 1, which we've already awarded it an integrated capacity of about 8.7 gigawatt of from polysilicon to solar module is what was awarded in PLI 1. As was mentioned, our capacity, in fact, I reviewed it today with the companies who were awarded, and it's absolutely on track. And with December 24, which is the 3-year timeline for our PLI, in fact, before that, we will have a fully integrated capacity of polysilicon to module produced in India as far as solar is concerned. And PLI 2 is now, we've called for bids. The bids are about to close, and that will add significant capacity to our solar manufacturing in India. In fact, looking at the numbers and looking at how these companies are actually adding capacity over and above what they have actually won or whatever they plan to, bid for in the PLI 2, they are setting up very high giga capacity factories. We will be producing enough solar manufacturing in India after about 3 years. It takes about 3 years for it to roll out. By year 2026, we are expecting that we will be producing enough solar manufacturing in India to not only cater to our requirement, but also to export. In wind for manufacturing, we are already producing, we have a capacity of about 12 gigawatt per year. And whereas we do not, at the moment, we have been adding about 1.5 gigawatt per year. Our target is to add about 8 gigawatt per year in the next 7 years. So we have sufficient capacity. We might have to add, sometimes you do have to import some equipment when it's absolutely new, but it's then taken on by our Indian manufacturers and they can produce when the numbers grow. But so even in the supply chain, we will be resolving the issue which we faced last year.
Okay.
So so if you look at financing, you look at supply chain, you look at Indian private sector capacity, their excitement, I think we are well on track.
Well on track. That gives me a good segue to get all four of you gentlemen to talk about what we just heard there. One, of course, is the export aspiration across different sectors, and many of the PLI schemes have been identified on the back of the export opportunity as well. But the other is the aspect of cutting down on imports. And Mr. Jory, let me start by asking you about how you assess where things currently are on both these fronts, the export opportunity, the export potential, as well as what we've been able to do by way of import substitution, domestically manufacturing, localizing, etc., and where we can do more to enhance competitiveness.
So I think the budget this year addresses both those concerns from the customs tariff point of view. And so we've addressed the supply side issues by dropping tariffs on a large number of inputs, intermediates, parts, components, etc., with different sectors, different industries, just so that the domestic availability is augmented and the value addition either deepens or happens in the country. There are several examples. If you go through the fine print of the budget, we've done it for mobile phones, we've done it for chemicals, we've done it for solar energy equipment, wind-operated generators, and so on and so forth. On the export side, there are three sectors where there were very specific requests and provisions which we've made in the budget. One on marine exports. So it appears that one of the constraints which the domestic marine exporters were facing was the availability of shrimp feed. and there isn't adequate production of that. It's obviously needed for cultivation of shrimp, and we've given a duty exemption to those. Diamonds, you would have heard yesterday, the whole world is transitioning from natural to lab-grown diamonds, and the seeds that are required for growing lab-grown diamonds, a duty exemption is being given there so that we can utilize the cutting and polishing capacity more, and we can also produce lab-grown diamonds domestically, of which the production has begun, by the way, but it isn't, it can be ramped up. So those are 2 or 3 examples that I have on the import and export side. Of course, on the export side, you are aware that there are already a large number of export promotion schemes. There's drawback that we provide already to exporters. So I think the architecture is very much in place in a general policy sense.
There have been demands to expand the RODTEP scheme to include more sectors. Is that something that you're considering at this point in time?
Yes. So the RODTEP committee had looked at steel and chemicals, for example, and they have made their recommendations on what the appropriate rate should be, and that is currently under examination.
Currently under examination. Mr. Jain and Mr. Iyer, you were both in Davos trying to talk to investors about the potential of the India growth story. And let me start by asking you, Mr. Jain, in light of all of the measures that have been taken, what was the feedback that you got about India's competitiveness, specifically from a manufacturing standpoint? Is there anything more tangible, specific steps that investors have put on the table that the government is working on?
I think this will be a pretty longish answer if you can, but...
Is that a long list of demands that has been made?
No demands, the kind of work which has been done. So first and foremost, I would say the kind of structural reforms which have happened, the policy governance reforms which have happened, add on that the rule of law which we have in our country, add on to that demographic dividend, add on to that the best part, talented youth of the country. So this is what is going to drive the India's growth for next 25-30 years. The startup story we all know. So all this growth will be driven by, to our mind, knowledge, innovation and sustainability. And our startup ecosystem is doing fantastically well on all these. They are providing frugal and innovative solutions to all these problems. So if you are solving a problem for India's scale, you are actually solving global problems. Next 4 billion people in the world, they are looking to those solutions. Like India's public digital infrastructure. That's marvelous. I don't need to get into this. That is something which is absolutely unique. Nowhere else in the world you have something similar. We have based all our systems on presence-less, cashless, paperless kind of systems. Plus, it is based on open source, open platforms, open network. So what happens, any new startup or any new person who wants to start his business, he can plug into this existing ecosystem. Rest of the ecosystem is provided by the existing system. So therefore, the entry barriers have been lowered substantially, and that is what is fueling the growth. So this is one aspect. The kind of solutions, when you are talking to Secretary MNRE, next important thing which is going to happen, there are companies in India which started as a startup, now they have really grown big, unicorns. The cost of 24/7 energy based on renewable energy, can you guess? 6 cents.
Wow.
This will excite the whole world. They have come out with designs. They are taking the renewable energy, solar, wind, everything, and using the pump storage with their improved efficiency design, which gives 81% efficiency. And they are giving firm power for 24/7. The real problem with renewable energy is this, that it is available only at certain time of the day. So they are spreading the risk by putting the solar and wind both. Wind comes in generally in the night, solar comes generally in the day, plus the storage. So even it out. So these are kind of solutions which are coming. You talk of anything, what India's startup ecosystem or young entrepreneurs are doing, it is pretty exciting. So it is a technological revolution which is happening in India. So most of the people are looking towards India as the real next place to invest in. I mean, you would have heard the stories from IMF that as the brightest.
Yes,
So
bright spot, yes.
So all those things are happening. So most of the people were excited in Davos. They were looking up to India to invest. And when we asked, there are very, very minor issues like FDI policy. India is one of the most open economies. The list where you cannot invest is not there, where you need government permission or you cannot invest 100%. That is just less than a page. So I can tell you with confidence that India's FDI policy is one of the most open FDI policies.
You know, you spoke a lot about startups, sir, and this is a subject close to my heart. I've been tracking it for 22 years now. So one of the big asks from the startup ecosystem is this business of linking the certification by the DPIIT that clears you to actually be qualified as a startup and then avail of the kind of benefits that the government is willing to put on the table. That process is taking very long. There are very few certified startups. When can we see that change?
That we have tried to improve the process. Earlier there was one committee which was taking it. So till about 3 months back, there are two major advantages which they are looking for. There are 3 levels of certification. First level of certification is that you just file and it's automatical, you get it automatically. So there are about 88,000 startups which have been registered. So there's no problem in that. Second registration is for angel tax, 56(2). There was some news items today that that has been done away. People are nervous about it.
No, it's just been parity. The non-residents have been brought.
No. The problem came from somewhere. So therefore, I would like to make that clear also on this count, that there is no change as far as startups are concerned. Anyone which has got a recognition of DPIIT for investing into that particular startup, the exemption under 56(2) continues.
Correct.
So that is there. So under that, more than 7,000 have got registered. There's absolutely no issue for 56(2). So first registration, which gives you benefits like GEM, startup, exemption from experience, net worth, turnover, criteria for participating in government tenders, that's available to everybody. This 7,000, I'm sure there is absolutely no hiccup. When you apply, you get it automatically. So it is only that the rest of the people have not gone to that stage where they want angel investors to come in or whatever. The last one, which was for 80 IAC. So by very nature also, 80 IAC is something which not many people apply because they have to grow big before they apply. But still our process was slow, and that was a complaint. Against about 2,500 applications, only 400 odd had been cleared. So what we did, we have now created 10 parallel boards to improve the speed. So in the matter of last 2 months, the approvals have gone up from 400 odd to about 1,200. And hopefully by March or April, we would finish the 100% pendency because we have multiplied our force by 10 times.
10 times, well.
And by taking the benefit of the experts in the ecosystem. So we have divided the work into 2 parts. One, people who look at the innovation part, one who look at the genuineness of the company. Both the inputs come, our committee automatically approves it.
Well, that's good news, and that certainly is going to be relief to many who are waiting for that clearance. But Mr. Iyer, you know, the sectors that you believe at this point in time are poised to be able to attract foreign capital specifically. Of course, the hope is domestic capital will start to flow in as well. But really, from a manufacturing standpoint, in the conversations that you had, where do you believe we're likely to be able to draw in the investment?
Well, Shireen, as I think Anurag has stolen most of my thunder on Davos. He's already said whatever needs to be said. But in the many private conversations which I had and all of us had, there's huge excitement about investing in India. And, you know, the sectors are the sunrise sectors, but in particular in the digital space, in green energy, there's huge enthusiasm. And I think for a couple of reasons. One is India's credibility in terms of delivering large projects at scale on time. So I think this government has got a phenomenal track record of delivery on the ground. And whether you look at infrastructure, you look at the 70,000 kilometers of road, the numbers are very big. And that was hugely impressive for many people who hadn't really understood the delivery at scale. 400 million bank accounts. You look at 2 billion vaccinations. And the ability to do this with quality and on time. I think that was very, very impressive, and that resonates. But the sectors are the usual. In addition to that, on the energy front, our record in terms of our NDCs, we are actually walking the talk on our climate commitments, unlike many other countries in the world. And I remember that discussion you moderated on looking at the whole, moving from looking at the adaptation.
Mitigation to adaptation, yes.
Exactly, mitigation to adaptation, which was put on the table at Sharm el-Sheikh. So again, on that front as well, I think there's a lot of confidence that, particularly now with India hosting the G20 presidency, the importance of putting these issues on the table, the ability for India to lead the global south, these were all issues which really resonated. In particular, what really excited them was the sort of alternate climate agenda put forward by the Prime Minister on lifestyle for the environment, of how India can lead the world in walking the talk on climate. There's evidence that individuals, communities, by taking simple actions, water conservation, solid waste management, segregation, not wasting food. So there was a lot of excitement around this. In fact, we had Sri Ravi Shankar there as well, if you remember, also talking about how India can sort of lead the world. Traditionally, in India, culturally, we have been practicing sort of harmony with nature. We heard Minister Gadkari talking about Jal, Zameen, Jungle, Janwar. That's our culture. But this is now exciting the world of how we can actually reduce emissions. There's a UNEP study which shows that individual actions can actually reduce emissions by up to 20%. But then, as you said, mitigation to adaptation, where's the money coming from? All that was also on the table at Davos. But all in all, a lot of excitement at Davos, and I think that will continue throughout our G20 presidency.
Well, speaking about the road ahead, and Ms. Gupta, let me ask you now in terms of what the priorities are going to be for the CBDT specifically. Of course, the effort is going to be to get people to move to the new tax regime, but outside of that, what will be the priority areas, the focus areas for the CBDT?
See, we have been following the policy of taxpayer-centric policies, and our endeavor has been to develop and deepen the trust between the department and the taxpayer. And that policy will continue. We have been successful into that so far with faceless assessment, then faceless appeals, and then quicker processing of returns of income, faster issue of refunds. And that sort of trust and development of technology for detection of the differences between what we perceive and what is actually the things are, will be the priority areas for augmenting revenue.
Mr. Jory, you started by talking about how you are looking at plugging the loopholes, especially through the FTA routes, etc. In light of the fact that India at this point in time is back to inking new FTAs, inking new CEPAs, inking new economic agreements, what do you believe we need to be mindful of? You also spoke about a policy response. What should we expect on that front?
I think we're just testing the waters there. So there is this narrative that FTAs are misused. And, what we've done is we've put in place a mechanism to check whether that is actually true.
Is it?
And we're still investigating a couple of cases. So there are problems that we've been able to identify in the way value addition is computed, for example. Now, those are not very deep sort of policy issues, but we can fix them, and we're learning as we go along. So when we're doing new FTAs, we are mindful of what could be the issues that we perhaps need to tackle more effectively when we're doing the negotiation itself. In any case, the landscape for FTAs is also changing. And a new kind of areas are coming into FTAs. Even with regard to tariffs, there are new concepts that are coming in the rules of origin and all that. So I think we're doing a pretty comprehensive sort of assessment of what it is in the FTA sort of area that we need to be mindful of in order to sort of safeguard our own interests, and also to make it easy for people to use.
Well, I think it would be very important to actually hear what the investigation shows, whether these FTAs have in fact been misused or not, because as you pointed out, that's been the narrative that we've heard for very long now. But Mr. Jain, you know, the expectation was that we would hear from the Finance Minister about the progress of the Gati Shakti program in the budget, but that wasn't the case. So let me address that issue with you on where things currently stand as far as the Gati Shakti plan is concerned, what you've been able to do in terms of speeding out infrastructure development, cost savings, time savings as well.
I think the budget was Gati Shakti budget. What is PM Gati Shakti? PM Gati Shakti is basically improving the infrastructure for logistic efficiency. So the allocation going up to 10 lakh crore, I mean, sir has already spoken, so I will not repeat all that. So that is what is the focus on infrastructure. What is PM Gati Shakti? PM Gati Shakti is way of operationalizing your schemes in a manner which is whole of government approach, sharing of data using technology, designing, I mean it's planning and decision making being much faster, much better in quality. That is what is PM Gati Shakti. So what we have done on PM Gati Shakti platform, we have 1600 GIS layers, which have all kinds of things. You have a 3D visibility of the earth, you have visibility of existing infrastructure, the road, rail, the water canals, the gas pipelines, the telecom lines, etc. Whatever infrastructure. You have layers for forest, the mining leases which have been granted. You have GIS layers for the geological wealth which is underneath. So while you are planning your alignments for the infrastructure, you can make an optimized decision making. Like there have been examples where by realigning the project, the need for an forest clearance has been done away. So your project gets advanced by about 1 to 2 years. That's one part. Second important part in PM Gati Shakti framework is that we are putting the revenue layers also. All the states have been requested, about 12 states have already done it. Rest of the states are in process of putting their revenue maps. So where the revenue maps are available. Say for example, I'll quote one. The road from Pune to Bangalore was being planned. So it passes through 30 different tehsils. So 30 tehsils means to create a land acquisition case, you have to go to different 30 tehsils if you go work the traditional way. Each case has to be made village-wise, so you finalize your alignment, you put on the map, find out who is the owner, and then come out. So it typically takes about 6 months to 1 year just to prepare the land acquisition case. Now, because the revenue maps are superimposed, actually it is a matter of hours that the output comes out. The case is prepared village-wise, name of the person, how much land, how much price it would, cost it would be for land acquisition, and the officer has to just sign it. So you gain in the DPR formulation, instead of 6 months to 1 year, it comes out in 2 months, 3 months. In case of land acquisition, instead of 6 months to 1 year, it comes out in matter of hours. So you are expediting, and the decision making is better. As I explained, you can avoid clearances. And what is most important, you are able to select projects which are better in benefit cost ratio. So for example, this year there was a specific mention of PM Gati Shakti that 100 projects have been identified. So what we did as a group, the work was, we are only nodal. It's basically the work done by the whole of government. So the group sat down together, analyzed connectivity to the ports. There are 66 ports in the country. Then it analyzed the logistic movement across 4 core sectors of economy: food, fertilizer, coal and steel. And they found gaps. If they are missing gaps, critical gaps which are missing, so a very small road construction of say 12 kilometers or 20 kilometers will enhance the capacity of the whole network. So they are highly benefit to cost, the benefit cost ratio in such projects is very, very high. So there were 156 projects which were identified. The departments had already sanctioned some 40 odd projects out of this. Rest of them have been sanctioned in one go by the finance minister. So this is a PM Gati Shakti framework. This will add to the logistic efficiency when these projects get completed. And then we have also done the monitoring. So first part is the planning and decision making. Second part is monitoring of the projects. So till now, there are 4 systems which are operating in the country. A particular department, say road, which has got the best developed portal of monitoring the projects. But in addition to that, officers of road department, MORTH, had to make data entry on PMG portal, the project monitoring group portal, from which the monitoring of issues takes place and it is raised to the level of Prime Minister if need be, Pragati framework. Then statistical department wants it for statistical purposes, so there's an online computerized monitoring system of statistical department. Then there is a system of National Infrastructure Pipeline of Department of Economic Affairs. So actually there are 4 teams doing the data entry. What we have done as part of PM Gati Shakti, we have integrated all the portals. Now nobody needs to make multiple entries. They do their own work. It has been all integrated through APIs. So invariably 3 teams have been released in each of these departments. And the accuracy of the data is much more. There's single source of truth for the data.
Well, that's good news and great to hear. But, you know, since we have the whole of the government here, in a sense, Mr. Iyer, I'm going to get closing comments from you. You know, the priority that NITI is going to have for the year ahead and the big opportunity that you believe that the whole of the government needs to focus on.
No, absolutely, Shirin. In fact, just to add to Gati Shakti now is taking it to the social infrastructure as well. You know, that's another very important part. We are working closely at NITI with Anurag and team and other ministries. So, for example, if you want to locate a tribal school, an Eklavya residential school, or an Anganwadi center, and as you're planning for that, the geospatial context is critical. How close is the nearest railway station? Is there a highway there? So it's becoming really important now to add that layer as well. So that's going to take it to another level. So it's physical as well as social infrastructure planning and development. For NITI, as the whole of government approach, I think one critical area, the 2 things I'd like to mention. The FM spoke about the importance of moving from monitoring inputs to outcomes and looking at results-based financing. I think that's a really critical agenda. We will be working through our Development Monitoring and Evaluation Office with selected ministries on a pilot basis in the coming financial year to really look at the huge investment made under centrally sponsored and central sector schemes to not just look at utilization certificates, but are we achieving outcomes and results on the ground through independent verification. So more value for money, I think that will be one major agenda. In addition to that, the continued support to states under the State Support Mission. How can we help states develop their own vision, their own inclusive growth, GDP targets? How do they set up institutes of transformation like NITI? And so I think those will be some of the important priorities for us as we go forward. But of course, we also see ourselves as an instrument for enhancing government effectiveness, both in the Government of India and the states.
Well, yes, that is a crucial area, and I know that NITI is the conduit, so to speak, between the centre and the states. Mr. Bhalla, the big opportunity and the targets that you've set for yourself for the year.
Yeah, it is. Actually, we look at it as a challenge. And I think we will rise to it.
You will rise to it. Mr. Johri, the big opportunity that you're going to be focused on?
I think since you're talking about whole of government, you know, we've also been focusing on how we can use whole of government for integrating databases, not so much from the point of view of compliance, but more from the point of view of ease of doing business. And that's a very important narrative, you know, whether it's tax departments or others. So, and of course, I think you talked about a force multiplier at the beginning. I think one of the force multipliers that you would have noticed has come through so clearly from our discussion is technology. And integration of databases, use of technology, so that, you know, all government departments that need to, for example, are involved in customs clearance, are all on one portal. There's a single window, and, you know, we speak to each other through APIs. There's no need for multiple data entry 20 times over. You know, you do one level of data entry and the job is done. So I think that is an important theme that all of us are working towards.
Yes, the power of technology being leveraged by the whole of government on full display here at the CNBC-TV18 budget verdict. Mr. Gupta, Mr. Iyer, Mr. Jain, Mr. Johri and Mr. Bhalla, what an absolute pleasure it has been. Thank you very, very much for joining us here on the budget verdict. Ladies and gentlemen, a big round of applause for our guests here who've joined us to explain the priorities and the roadmap for the government going forward. But before I let you go, let me welcome on stage Mr. V. Vaidyanathan of IDFC First Bank. We couldn't have put the budget verdict together without his support. It's great to have you back, Mr. Vaidyanathan. Thank you very much for joining us here this evening.
Good evening, ladies and gentlemen. Secretaries who are present today and spoke so wonderfully well, and Mr. Gadkari. Frankly, it was very, let me say, fantastic hearing all our secretaries speak so well, explain everything so well, so articulate, and a bias for action. It was really